back to Trade Delicious Live. It's morning briefing. It's 8:30 a.m. Let's get into a little bit of morning briefing. This is a show where both John and I, we're going to debate different positions. We're going to talk about some of the fundamentals, and we're going to get you up to scratch with everything that you need to know. No time to waste. Good morning. Good morning. It's 8:30 a.m. British Standard Time. Welcome to Trade Delicious and welcome to morning briefing. S&B, right? For those of you that don't know, that is the Swiss National Bank, have just announced their new policy rate. And according to John, you just forwarded me some information. They have cut. They have done a very surprising cut. We were forecasting it to come in at 1.5. We both agreed about 5 minutes ago that 1.5 was where we're going to be at. They've cut 25 basis points, coming in at 1.25. Swiss franc pairs are evidently moving and volatile at the moment. What are you seeing across the board there, John?
Yeah, so I'm just looking at sort of Euro Swiss at the moment. Euro Swiss spiking. Euro Swiss was on my cards this week to be a bit of a seller of. Expected the Swiss National Bank to hold rates a little bit. Wouldn't have held anything through a rate decision because you just never know. But we're starting to spike back up. A little bit of volume coming in around about this 95.40 handle though. So seeing a little bit of a reaction there. Whether this will be something that upstands now with some Swiss weakness would be quite interesting to see. Whether people will try and fade this move at the moment due to sort of the political sphere at the minute. You know, there could be an idea that this could provide a little bit of liquidity for those traders that are looking to get on the back of some Swiss strength in the short term. Obviously, press conference to follow at 9 a.m. So we'll see what the Swiss National Bank will kind of outline, why they cut rates, you know, what they're looking to try and do going forward. And that'll give us a big idea of where to position ourselves. But at the moment, we're starting to see that Swiss franc just weaken across the board, especially against the euro, which is to be expected. You know, Swiss yen would probably be a big mover as well at the moment. Yen has been on the weak side, but it's not really been weak to a point where it's noticeable. It's just slow grind higher on a lot of the yen pairs. So Swiss yen dropping quite drastically at the moment. And you know, if we look at the daily chart here, we've been in a very big rally on Swiss yen. So it might give back some of these gains that has been it's been holding recently.
Yeah. Look, to be honest, I'm just trying to get a bit of an obviously the rates haven't gone anywhere near as high as what the rest of the globe's seen, and I kind of saw that as a competitive advantage at the moment, given where they're positioned, that they would hold here for a little bit longer. I'm surprised to see them cutting, so I am intrigued to read their conference. When is that going to be coming? That's 6 p.m. on the so in about 25 minutes. I'm intrigued to read what it is they're seeing, or listen to what it is they're seeing, and why they've decided to go another 25 basis points. Because to be honest, I was standing here pretty confident that 1.5 was going to print, and I like the idea you've just secretly put ahead there, quite cheekily, of this could be a potential good opportunity to find some shorts in the Swiss franc, or you know, get a good price in there anyway.
Yeah, it depends what the scene's happening. So I'm getting a few headlines just popping through right now. So some comments out of the statement. So I'll just kind of read them. They're bullet pointed. So ready to intervene in the FX market if needed and necessary. A renewed increase in geopolitical tensions could result in a weaker global activity. Able to maintain appropriate monetary conditions. And they've said they will adjust monetary policy if necessary to ensure inflation remains within the range, consistent with price stability over the medium term. Inflation in Switzerland is currently being driven by, above all, by higher prices for domestic services. They see inflation coming down in 2024 to 1.3%, down to 1.1% in 2025, and down to 1% in 2026.
Oh, well, they don't want to be
So
getting, they don't want to be getting any lower than that.
no.
Okay, very early bet, very early bet, but
Yeah.
interesting. That does sound like kind of a bearish Swiss franc. And the
Mm.
fact that they're saying as well, one of the dot points you've got there is they're saying willing to intervene if necessary. So they're expecting a weak Swiss franc.
Yeah.
So the Swiss National Bank themselves are sitting there going, "Hey, it's going to come. We're ready to act on it." And that, do we short the Swiss franc?
There's a potentially. I would probably wait for the press conference to come around just to have a little deeper dive into what they're really thinking about. Usually in the press conference, they might get asked a particular question that gives you a little bit more of an insight. So I do like to sort of wait for those to happen. But yeah,
Chuck,
it's
can you check the 1 minute chart on US dollar Swiss franc for me? We just had a nice 50 pip move there. Just as a bit of background noise that we can have on to keep an eye on how price actions moving over the next few minutes while we touch through this stuff.
yeah, yeah. So yeah, like a huge move
Yeah,
on dollar Swiss right now. Even dollar yen's moving higher, which is nice because we talked about potential longs on dollar yen yesterday, I think it was.
yeah.
So that's moving higher. Had some skin in the game on that. Was a little bit offside yesterday, but it's started to come back a little bit, so that's welcomed. So yeah, this is quite interesting because there's there is still that balance, isn't there, in terms of some central banks kind of are they thinking that inflation might reignite? So like the Federal Reserve, maybe, that's why they're keeping rates a little bit higher for longer right now, apart from obviously the election coming up. So if you've got a sort of stronger economy, inflation does will tend to come in a little bit hotter. Um, so it is interesting. Swiss franc has been very, very strong recently. Um, Yeah, it's an interesting way of cutting rates. I would say cutting rates would lead to obviously a weaker Swiss franc, um, naturally, but it's how they want to set things up. Like you said, the idea of intervening makes me think that yeah, maybe the Swiss franc will get a little bit weaker, and they're happy to kind of step in and influence that. Um, yeah, I'd have to do a little bit more of a deep dive. This one's just kind of come out of the back. It wasn't expected from us. So
No,
it's a little
yeah,
bit it's one of
yeah.
those
No,
where you've kind of got to just go, okay, well it's happened. Let's see what happens in the press conference after. I think if it was 1.5%, we'd be talking a very different setup right now. We'd be talking about how they're keeping it in rate because of X, Y, and Z, which was expected. But I think the previous meeting when they did cut rates, it was expected to stay the same before they cut, I think it was. I haven't checked in on the sort of main drivers on the Swiss National Bank this week, to be honest. I've been mainly focused on the Bank of England and the inflation situation and the polling situation at the moment because obviously that's going to be a big driver going into the next couple of weeks, really. Who we're going to vote for, X, Y, and Z. So yeah, I haven't really kept up with the Swiss National Bank. Maybe I should have a little deep dive into them because if we are going to see that selling, then again, that's opportunities for us.
yeah.
If they are going to come in with weaker statements, if they feel that the data is going to come in a little bit weaker, that's great for us because it gives us opportunity. And we can look at stronger currencies at the moment. So dollar Swiss could be a play to the upside. We were obviously talking about dollar Swiss shorts under the 0.9 handle, which played out pretty nicely. I was looking at sort of the price action and the area that we said we could come into has been targeted. Lovely. If we use a volume profile and go from the sort of low that formed on the 28th of December up to the high that formed on the 1st of May, this zone here was the zone that I was really interested in price coming into. Really sort of large volume area coming through, and that could be a sort of perfect area for a little bit of a reversal back to the upside on dollar Swiss. Whether it continues, that will be, you know, we'll have to look later down the line, but at least targeting any kind of larger volumes that have come in down through this area could be a good play to the upside in the short term. Again, what other currencies have been pretty strong recently? The Canadian dollar's been pretty strong. So
Mm.
you could go and take a look at your sort of your CAD Swiss as well. We did breach that 0.65 handle, started to come down into these kind of lows. Um, Not as favorable on this market as other markets. It is a little bit of a kind of falling knife that we've had recently from CAD Swiss. We are kind of coming into again. I haven't done analysis on CAD Swiss for a while, so we'll have to see. But you got basic support and resistance coming in around about 64.50s. So yeah, I have got an alert at 6,500 because of this little volume area that was built in here. So yeah, we'll have to see. We'll see if the Swiss franc is updated across everything now. So I'll have to see how it plays out going towards the end of the week because I use a lot of strength and weakness analysis in my day to day sort of trading watch lists and things like that. And obviously the Swiss franc has been strong of late. So if that were to change, yeah, those will be updated. And we'll have to wait and see. I did quite like, the idea of being a buyer of the Swiss franc, but that would definitely definitely change my mind. And this is I guess, where I think maybe macro can be a little bit of technical right now because
Yeah.
technically the trends are still down on most of the Swiss pairs. So you'll think the Swiss franc is strong. So if you didn't have the macro background, you'd be like, okay, well, this is perfect. I'm just going to short from here, keep in line with the trend. But if they completely switch their narrative, they start beginning cutting rates and they're saying, they want a weaker Swiss franc X, Y, and Z, then that could be vulnerable and price could, potentially shoot higher here, depending on what we're looking at in terms of strength and weakness on the base currency.
Yeah,
But
I
yeah,
think I think you've hit the nail on the head. I think we like to discuss for those of you that join us every day here at Morning Briefing. You'll know the one thing we put forward is what is the trade, and I think if you can take anything away from what we're saying right now, is it's not out yet. All right, we've been given the trailer. They've done an unexpected cut. Just to confirm, the last cut they did was also unexpected back
yeah,
in March. It was an unexpected cut, so I can confirm that for you with your speculation there.
yeah.
But
Thanks.
just to confirm, we are not in this. We are not going to be in this until we understand the thought process behind it. What you're seeing right now is obviously a lot of volatility in Swiss franc. You're seeing a lot of people. This is a surprise announcement. So you're going to see a lot of people reacting. Now, you're either going to see a lot of people repositioning the long stuff or a lot of people trying to capitalize on that extra volatility in which we're witnessing. So this initial bearish move in the Swiss franc, which we're seeing across a number of pairs, could just be complete BS, right? It could be a little bit
Yeah,
of repositioning. It could be people betting that the Swiss franc's going to be weak now. Who knows? We don't know. And no one will know until we get kind of that clarity from the Swiss National Bank. So both John and I, while sitting here talking about the Swiss franc, talking about what we want to do, we are hands off. Well, I'm speaking for myself, but I'm pretty certain
yeah,
I'm speaking for you as well, John. We're hands off until we get clarity on what the situation is. And then if that data points or if that kind of picture does paint the picture of a weaker Swiss franc, that one thing sticking with me, we're prepared to intervene, tells me they want, like, they're expecting a Swiss franc weakness. And usually it's like the CEOs of a business expecting revenue to drop. 9 times out of 10, that revenue is going to drop. They're sitting at the helm. They see how this moves. They see where it goes. If the Swiss National Bank is seeing weakness in the Swiss franc, even going into recessionary pressures across the globe, it's making me go, oh, okay, maybe that safe haven asset's not the play. Maybe a bit of strength in these other assets against the Swiss franc is the play, and could not agree with you more that the macro edge here is you can get before the trends because the macros have changed, waiting for all those technical traders to catch up.
yeah, definitely. I actually think interesting from before. I'm pretty sure the Swiss National Bank, when they cut rates the first time, also said that they wanted a weaker Swiss at the time, and they just didn't get it. So maybe this is another driver why they've cut those rates because they want a weaker Swiss franc. And I think it was to help with their imports and things like that. I know, obviously, I think a weaker Swiss franc would be more sort of expensive on the export side of things, but I think it was the import side where they wanted a sort of weaker Swiss franc.
Yeah. To really quote them on the last release, the Swiss National Bank said it was taken into account the reduced inflationary pressure in which they feel throughout Switzerland, as well as the appreciation of the Swiss franc in real terms over the past year. So yes, they were taken into the account that into fact that the appreciation of their currency was quite quick, and it does sound like they were pushing for a weaker Swiss franc, which they have not gotten. They, if
No,
anything,
and that
they've rallied it faster.
yeah, exactly. So that might be the reason why they've cut. Plus, they've got, I suppose, like we were discussing all week, the political risk in Europe. The Swiss franc is almost like the European safe haven. And when you were saying
Yeah.
maybe we've already seen that risk off play in Europe, definitely in terms of the Swiss franc getting stronger. And that's what they may be worried about as well. They've seen this kind of play out. They've seen this political risk climb. And the Swiss franc's been the go-to currency for that. And they're probably thinking, we don't need this right now. We need to try and do something about it.
I like it. Will investors fall for it? I don't know. I don't know. Will investors believe that other investors are going to start shorting the Swiss franc? Not sure. I'm not sure. I like the idea of Swiss franc from what they're saying, but they also need to convince millions of other people so this trade is profitable. And I'm not.
Yeah,
I'm not entirely convinced. So I'm keen to listen to the press conference. I'm keen to get an understanding of what their excuse is. That I reckon that's probably the play. Will they tell
yeah,
the public that? I don't know. What are they going to say? What are they going to discuss? Maybe because their economic growth, their GDP is at like what 1%. I don't think it's too bad. It's kind
no,
of relative to what everyone else has been. Andrews popped in just straight out the way and said, "Finally, Bank of Japan have a worthy opponent." So that's that
yeah,
really tickled me. But look, we missed the chit chat this morning because obviously
yeah. We
Swiss
dove
National
straight in.
Bank took over. We missed Musclay yesterday. I don't know where you were, Musclay, but I missed the quote of the day. But he's back in today. So he said, "Good
I
morning."
love it.
Good morning, one and all. He's actually sent two little messages here. So
Oh,
we'll
okay.
start with the quote of the day coming from James Russell Lowell. James Russell Lowell. I think I'm pronouncing that right. Quote of the
I
day.
don't know who that is.
You do or you don't?
I don't know who that is.
Yeah, I don't either. And we're probably going to look like mugs. But I'm willing to say I
Oh,
don't
it's
recognize him.
sorry. It's an American poet and critic.
That's why I don't know who it is.
Yeah, yeah.
Let's get in it. Mishaps are like knives that either serve us or cut us as we grasp them by the blade or the handle.
Okay, yeah, I like that one. That again is another deep one.
Most quotes of the day, I think they're going to be a little bit hard hitting.
Yeah, they are. They are.
Yeah.
I like to try
Um,
and then kind of put them into a trading light, but sometimes not necessary.
when it was sitting here, it says serve us or cut us. All I was thinking, first thing that popped in my head as I was reading out was interest rate. Interest rate.
Yeah,
He just
yeah.
said cut
Okay,
us. I
yeah,
was
there
like,
you go.
interest rate. Yeah, cut 25 basis points. Just happened.
Yeah.
That's straight away my mind's going there. He chucked in another little message afterwards as well, saying how we handle problems or mistakes determine their impact on us. If we approach them wisely, like holding a knife by the handle, but if we hold them poorly, like holding a knife by the blade, obviously the impact is going to be different. So he's going along the way of how you really carry yourself into some of these problems determines how big that impact is on us. I like that.
Yeah, I like that. You like that. It's almost like I was doing a video yesterday and I was talking about the um using data is your friend when it comes to trading.
Mm.
And it's almost, I
Oh yeah.
guess, it's like holding the knife by the handle. When you go into a situation, you don't want to be impulsive in this. You want to have a good idea of what's going, even if you're just trading technicals on a strategy basis. You've got to do the if you're doing the work on the strategy, then you've got to try and follow that as best to your ability. Because if you think, oh, well, it's nearly like what my strategy is set up, I'm going to take it anyway, then you've lost your edge immediately. You're holding the knife by the blade. You're not holding it by the handle. If you've got that handle, you understand that where's the better play for your sort of trading right now. Um, so yeah, I like that one. I
I
can
like
I
it.
can I can relate it, and that's my job. I'm going to try and relate every quote to trading.
I like it. I like it. Andrew just popped in and said, any read or insight on the unexpected rate cuts? I don't know where you've been for the past 15 minutes, Andrew, but we've just been nonstop talking about the Swiss National Bank unexpected cuts. So I recommend you just hit the little scroll wheel at the bottom and head back to the start, and you'll hear lots about it. But yeah, look, to me, like the idea of maybe some Swiss franc weakness, which is completely opposite to what I was thinking 24 hours ago. Obviously, with that risk off, risk on kind of feeling that we've been walking into. Let's shift gears. A quick little headline that I wanted to run everyone through. Don't know too much on the subject, but it's important for everyone to know that it looks like Russia and North Korea have signed some kind of defense pact, which essentially means if one or the other is invaded, they're gonna use all, to quote, all available military assets to help protect each other. And so will that change much? I don't know. Will Russia deem that Ukraine and the US are currently attacking them? Will that gorge a response from North Korea? Don't know. But it looks like Putin has signed that deal. They're both, everyone's happy with that deal on that side of the globe. And they're moving on now. He's traveling down to Vietnam. So let's keep an eye on what's happening over there and make sure we're well kind of focused in where we could go. But that was a quick little headline, quick little side talk. What I wanted to jump into is the more news today, Great British Pound, Bank of England. And in particular, you sent a little message just before we jump into what we're actually expecting to come out today, which is the monetary policy statement. I'm happy to say 5.25%, but today's been fun so far. So who's to say which way that's going to go? You had a little warning sign for us this morning with Nigel Farage.
Yeah, I saw a kind of a poll yesterday that he has took a substantial sort of move in the polls. So to put it into perspective, the poll that I read the day before, Labour had a 46% chance of being elected. They have now fallen to 36%. Reform were around sort of the tens, 15%, I think it was. They've jumped to 24%, jumping over Conservatives who have dropped to 15%. And then you've got obviously the others that are taking up the other percentages. But it's an interesting one. I don't know if you've like been watching what's been going on in terms of UK politics at the moment, but there's been a lot of Nigel Farage has been on the he's been on the Twitter, he's doing the old Elon Musk, just kind of tweeting away, just kind of saying X, Y, and Z, and he's saying a lot of things that I think people, especially younger people, it's all kind of reminds me of Trump joining TikTok.
Mm.
He's trying to appeal to the younger generation. Nigel
Who
Farage
are
is now,
very susceptible at the moment, right? They're not
hmm,
happy. The younger
yeah,
generations are not happy with everything that's going on. So a very easy audience to target at the moment. If you get an unhappy population, it's very easy to win them over with some radical ideas.
yeah. And I was talking to my partner last night, and I was saying to Ellie, I was like, "Oh, have you seen this?" Because I try and talk sort of trading and stuff sometimes, and she just goes, "That goes right over my head. I have no idea what you're talking about, even politics." And she's just like, right over my head. And even I said, so this one thing that he come out with was basically to remove stamp duty on properties that are £750,000 or less.
Mm,
And I think stamp duty at the moment is like five, or it might be 5%. It might have gone higher. It might be like
yeah.
15% of property value. I can't remember off the top of my head. I should know that recently because I've moved house like 2 years ago. But you know, it's
Yeah, just
in
don't look at the
COVID.
statement. Don't look at
Yeah, exactly. Yeah, yeah,
it. It hurts.
yeah. And that would appeal a lot to the younger
Yeah.
audience because they're struggling to get on the property ladder at the moment. And if they've got to, and people have got to pay stamp duty, it's, in COVID, there was a huge rally in the housing prices because they stopped stamp duty. Um, and everyone was like, right, this is a great time to like sell your house now because we're not going to be charging extra like 15K just to move house.
Yeah.
So he's come out with something yesterday, and I think he's definitely trying to just say the right things right now, and it looks like in the polls maybe that it's working right now, which is again interesting. Where's the trade in that? I still feel pound weakness is even more of a trade at that point. So yeah, what are your
So
thoughts?
yeah, I'm not up to date with UK politics. You're my guy for that. Which is the beauty of morning briefing, right? So
Absolutely.
UK politics aren't my strong suit. I loved by the way Rishi's little video yesterday. That really tickled me. But good on you, Rishi. You managed to get inflation down to 2%. If you guys aren't following us on Twitter, I highly recommend you do. It's at John Talks FF. At Talks FX or at Jordan Mellor or at Trade D underscore TV. We like to have a bit of banter over there on Twitter. And Rishi Sunak put up a video yesterday taking credit for getting inflation down to 2% when he was in office compared to what it is. And I was just like, oh, what a man. He's done it all by himself. He's put it on his back and he's just done it for the world. But I found that very amusing. But yeah, look, the pound. I trust your analysis on pound weakness. Not enough for me to put money in it yet. But I keep going back and forth with the Bank of England. If I were to involve the pound in some kind of trade, it would be because the asset I'm pairing it against, I have a stronger analysis on, right? So that would be something like
Yeah,
against the Swiss
100%.
franc. Whereas if I'm looking for weakness and you're leaning towards that weakness, it's making me think, okay, probably not a trade unless it's a range bound trade, maybe some
Mm.
options struggling on the pound Swiss. But I'm looking more over to maybe that Japanese yen. If we get a bit of strength coming through the Japanese yen, there might be a bit of an opportunity there in Great British Pound Japanese yen.
Yeah, I
If
like
I
that.
want to be exposed to that asset, I don't know. The swap fees will eat me a little bit, so I need to keep like when you're looking at the reverse carry trades or even carry trades for that example, you need to make sure that the movements throughout the year that you're trying to get that interest rate down, right? Because the carry trade on US dollar Japanese yen at the moment is something like 4%, 4.2% or something like that, right? So you make 4%, 4.2% for holding that money long in US dollar Japanese yen for a year. But if the pair is going to move 5% in 2 weeks, well, what's the point in holding that carry trade? And that's my
Yeah.
concern with the Japanese yen at the moment, doing a reverse carry trade. I need enough movement to the point that that reverse carry trade isn't going to eat away the profits. I would need a 10% movement in that asset. Can we get it? I don't know. But
Yeah.
optimistic about one thing and one thing
Okay.
only, right? So I do have positive news. I am a positive
Oh yeah,
guy.
we said we were going to do this, didn't we? We said we were going to open with positive news.
I know, and we've already failed. No, but to
Yeah.
be fair, Swiss National Bank stole our thunder, right? And
Yeah,
not
they did.
only
They did.
stole our
Yeah.
thunder, slapped us in the face right as we went
Yeah.
live by doing a surprise
Exactly.
cut. So that's always fun to deal with. But one thing I did notice, silver's snuck back into the $30. It
Oh
snuck back
yeah,
into the
yeah.
$30 range.
That's. I
That
haven't actually.
$32 target is starting to look a little bit prettier. I was just having a look at the silver. It's rallied over the past few days. It's been producing quite well, and all of a sudden that $32 is looking a little bit sexier. I don't know about you. I don't know about you, John.
Yeah, I actually one of my alerts went off yesterday.
Oh,
To have a little look at this. I was looking at this little range that had been developing. If my box wants to select in and around here. So I was looking to see if we broke out of that range back to the upside, and we have now, which is great. So we were trying to get long. May have just got a little bit early into the moves now, and this weekly chart looks fantastic for me. You know, if you're looking
yeah.
at this sort of,
It's
especially if you're
cute.
a trend-based trader, it's just typical higher high, higher lows. Come back, retest those weekly highs. You know, oh, I've had another alert go off as well. Sorry, I'm short EuroCAD right now, so alerts are going off every now. So yeah, that's really thrown me off. But we've got this little range here on the daily chart, breaking out of that now, which is nice. Might get a little bit of a retest for that volume for a move higher there. So yeah, I do like that. Do like that a lot.
Like it. That's the random thing I'm going to leave you with. Tomorrow we're back 8:30 a.m. as I throw my mic across the room. 8:30 a.m. once again, but we're going to be here a little bit longer, right? Because John and I are going to take over the live trading room tomorrow, right? We're going to have a bit of fun. We're going to have a bit of fun in there. We're going to actually put money where our mouth is and have a bit of fun trading. So make sure you're here tomorrow. In the meantime, make sure you hit the like button as we're going to take a quick 30-second break and send you over to Will and Rich for the live trading floor. So guys, make sure you hit that like button. We'll be back in 30 seconds. Cheers.
Cheers, guys.
Did I do something right, or did I just get lucky?
Better at identifying the trade longer than I am.
There is so much to think about outside of price. I can see a pattern, so it's fine.
Good guys! Woo!
So my trade's holding around about moving like this. With my attention to the chart. There was something, and I'm like, I love that. And
They're wrong.
Well, I'll take that, man. That sounds like I'm most confident I'll manage risk. Thank you, everyone. Yeah, go ahead. All right. Thank you. Cheers. It says work smart, not hard. Good morning. Good morning. Thursday morning feels like a Friday because, as Jordan said, I think Jordan and Jono are going to be doing the London stream tomorrow. So let's get straight into it. I hope we are ready to get some trades online. I've already pulled the trigger, but we'll run into that in a second. Let us know who we got in chat. Give us the pink hand emoji, or just say hi if that's your jazz. Second day in a row, Will. You're joining us on the London stream. What's happening? How you doing?
I'm not too bad. I'm not too bad. Again, another gym session done. This time it was a bit of a late one, so I am still wearing my vest. So yeah, I chucked a jumper on, so I'll be straight in the shower before I smell my office up too much. So I'll be straight in the shower after the stream. But yeah, I'm good. I'm feeling good. I'm feeling alive. I'm a little bit stiff and a bit achy today. As I was a bit of a late one, so I haven't really had time to sort of relax after the gym. So you may just see me halfway through this stream just take a massive deep breath and relax, and then I'll be back to Will.
Mate, there's no time to relax around here. We're going to dive straight into it. Let me pull up the news calendar. We've got a big day today. So for those of you that didn't know, yesterday was a little bit slow. We had the USD bank holiday. Now today, I think it's going to be completely the opposite. So I woke up this morning, I was like, oh, look at this. We have a CHF interest rate. And then I joined the stream and I hear Jordan talking about how we had a surprise interest rate cut. And I was like, wow, this is the third currency, I believe, that has now dropped interest rates. Don't quote me on it. I might be absolutely wrong, but the source would be Forex Factory Calendar. We can scroll down here. We can see all the base rates of the currencies. Why do we care? Because these numbers move prices, and move prices is what we're forecasting today. Because we have, and I didn't know this until this morning, this is how organized I can be around my trading, or this is how I look at price action on a day-by-day basis. Look at this. Official bank rate coming in for GBP today, 5.25. That's forecasted to come in 3 hours from now. So will the GBP follow suit? Will we see an interest rate cut on the pound today? I'm going to be watching very closely. If we see this number here, 0.27, this is the amount of MPs, I believe, that vote for the rates to stay the same, to cut, and to raise. So what is this first number? Let me remind myself. The voters reported first number is how many MPCs members voted to increase interest rates. So we have a forecast of 0 are forecasted to increase. The second number is voted how many did to decrease rates. Now, look at this. From last time, May the 9th, we had 9 votes to hold the rates. Today, we've got 7 to hold and 2 to decrease. Now, we've already seen 3 currencies, I believe, which was the euro, I think, was it the euro, the dollar, and the CHF, all dropped interest rates. Will the pound be the same? Follow that, we've got unemployment claims as well. So it's going to be a big day, I think, in the charts for price action. So 3 hours from now, if you're trading the pound, please, as Aaron says, wear a stop loss, manage your risk. Paul Brown coming in with pink hands, Misha, Barry, Andreas, Luis as well. Eamon, how much do you bench? That's a good question, Will. That's a good question. How much do you bench?
Okay, I was wondering, I'm amazed you haven't asked me privately yet, Rich. Truth be told,
No, I'd just rather ask you publicly, mate.
Just expose me. Truth be told, I don't bench anymore. I don't. My brother actually did a really bad injury with his sternum due to bench press, and it's actually a really unnatural movement with bench press. So unofficially, I would advise people not to do bench press, but that's me personally. That's true. people who I've known to actually do lifting, bench press, all sorts of different movements. Bench press is actually really, really bad. But back when I was benching, I think it's about anything from 80 to 100 kg.
That's a pretty big range. Anyone's laughing at me because I have this tendency of just kind of reading chat comments out loud without kind of pre-planning what they might actually say. So please don't abuse me on that and catch me off guard. So let's pull up the charts. We'll get straight into this. I pulled the trigger this morning nice and early on a Euro USD position. So I'm long on this with 5 lots already. Going to zoom out to the hourly. My stop should be down on this local low. Let's get rid of this and we'll do a top-down analysis. Let us know if you want us to run through any currency pairs or if you're in any trades this morning. And I'll do my best to talk about why I'm in this trade. So first of all, we know how it goes. We're going to put the line on the top of the chart. We're going to find the rollover candle, which is here. So this is the highest price point price has been today. And then we're going to put the line on the bottom of the chart based on where London Open comes in, which is around about here. So we can already see, if we look at the hourly chart, we can already see that we have broken this Asia range. Now, I'm anticipating price, let's zoom in slightly, to run under this low. We've got this beautiful buying volume coming in here, and I'm anticipating that the market is going to have a hard time running through this level. So got in with 5 lots. We got a little bit caught out yesterday. Unfortunately, we got wicked out on a 15-lot trade. I was sizing up. I got a little bit too aggressive, too greedy. That was a really, really nice move to the upside, but unfortunately, I couldn't time it. So market direction, again, we speak about this, is easy, or at least I find that's the easier part of trading, but timing the move can be incredibly difficult. So currently on this trade, I have an open position of $660, and I reckon I can get another 5 lot in. Let's go ahead and put this in now. I just wanted to get my first order in a little bit earlier to make sure that I was in the trade, because I'm anticipating that we're going to recover quite well from this price point. Now that we've dropped a little bit lower, I'm going to get a second order in. So we've got 2 orders in, 2 5-lot orders in this. We're round about break even. Now the analysis comes from the 4-hour. This big, beautiful move to the downside. We've came and broken this high, which is the core of my trading. We've broken this 4-hour structure high. This is an indication that the market might want to move higher. So all I'm looking for is longs at the moment. Now we're jumping down to the 1 hour, same again. Market pulls back, tries to go higher. And then I think there's a good amount of buying pressure on this low or close to this low. If we can just whip under it, I get a really good entry. And again, this is where I'm looking for the trade to push from. So we get this multiple bearish structures to the downside. We push higher, get everyone going long, confirm the long with a high above this high, and the market's now dropping into it. So technically, if the market drops under this level, sellers are running price lower. I can formulate a short idea on a pullback from this. So happy to be in this first and foremost on a, I was going to say Monday morning, on a Thursday morning. But Will, what do you got for us? Are you in anything at the moment?
I will be, and I'm absolutely annoyed that you've already pulled the trigger, because I wanted to be the first one to pull the trigger this morning.
You got to be quick,
but
mate.
I haven't. I know. I got to be pre-trading before the stream to get in before you now. I haven't looked at EU just yet. Because I did EU yesterday, I've focused on GU this morning. So let's have a quick look at GU. I'm going to share my my trading view with you, and then I shall share my terminal as I pull the trigger on some GU longs. But anyway, let's show you why I'm looking at this. So this is on the 4-hour. Now on the 4-hour, this is what I drew out yesterday. Unfortunately, I didn't pull the trigger on it. Coulda, woulda, shoulda, but it was a winning trade. But nonetheless, again, it wasn't a winning trade because I didn't actually trade it. But however, it did come absolutely perfectly into my range here. So what I did is I drew the fib from this high down to, let's have a quick look. Hang on, let's try and draw it out. Yeah, from this high up here down to the low down here, just to see if we can get a pullback into this sort of premium zone, into this discount zone. And once we did, what I wanted to see was to see if we can have some form of rejection in this area and see if we can have a downwards push. We did on the lower time frame, which I shall show you briefly, but let's move on to today. Now, obviously, what I'm looking at here is this nice little low here. Now this area, if I see this going before we have some nice push up. So what I would like to see is something along the lines of that. Now that's what I see on the higher time frame as we show price is moving bullish. So as we see this very simple price structure, we can see we are creating those higher highs and higher lows. Now what we see here is retracement. Now I'd like to see this low go before moving back up. Now that's what I see on the higher time frame. Let's drop down onto the 1 hour. Now we see this sort of imbalance area. As you guys know, I love my imbalances, and we fill that absolutely perfectly. But as I said, on the higher time frame, I'm looking at this area here. So, oh God, what am I doing there? There we go. So if I drop down to the 15-minute, I don't really focus too much on the 1 hour. It's mostly 4 hour jumping straight to the 15. So let's have a quick look what we're seeing on the 15-minute. And what I like to do is draw out again the highs and the lows of the previous session. So I like 12 a.m. till 7 a.m. draw the Asian highs and lows out. So what we've got here, in fact, I'll get rid of this now because this is yesterday's. Oh God, don't do that. There we go. So in fact, what I'll show you as well is this nice little sort of consolidation area here, which I wanted to see price come into on the 15-minute. We came up absolutely perfectly, rejected. Before I could actually look at getting in on this, I thought, right, okay, let's check out this high. Put the high here. We took it, and then we started forming that sort of structure and that rejection on the 5-minute and the 1-minute. And that's where I would have entered around about here, which tapped in perfectly and actually moved down. I didn't know if I was going to see it go much lower, so I wanted to have a short-term take profit at this wick low here. But I did see it coming down to fill this imbalance up here, which, truth be told, it did absolutely perfectly. But again, wasn't in this trade. I was purely just watching it. And that is a 1-to-1R, or 1-to-1.4. Right, anyway, back to today. Now, I'm looking at this here. I'm going to enter around once it gets to this level here. So what I'll do any second now, once I've finished explaining my analysis, I'll bring my terminal up, and then I shall share with you me pulling the trigger on this GU. I want to see... what I'm going to do, I'm going to half a risk. I'm going to go 2 risks. I'm going to go 1 trade here because I want to see it take out this. And I'm going to TP up here. And then I'm going to also enter around here and TP up here. So that's what I'm seeing. Again, I haven't looked at EU just yet. I shall do in just a moment. But this is what I am seeing on GU. Now,
when you're splitting your orders, let me hop in quickly. You're going to go in with 2 entries. Are you using 2 entries of standard risk? Are you halving your risk? Are you using the same lot size? Are you martingale?
Yes.
How do you approach that?
So what I do personally is I like to think about it as one big trade. And then if I think about it as one big trade, I look at my different entry levels, and then I divide that risk out of that one big trade. So if it's one big trade and I'm going to be risking 5 lots, and I see 2 entries, it'll be 2.5 lots per trade, and that'll be 2 trades. If I'm seeing 3 entries, then it'll be divided by 3. So that's how I divide it. I divide it by how much I'm actually willing to lose in this movement, and that's how I.
What do you do when one order's filled and the market rallies, and you go, "Oh man, I have 3 entries here. I've divided my risk by 3. I hit the market to the turn. I got 1 entry filled. Now I've only got 1/3 of the profit." How do you deal with that?
I'm grateful for the profits, and that's how I look at it. I'm grateful. I see it, and I think it could have been worse. It could have run straight through the stop loss, but profit's profit. And if it gets to a certain point, like let's say for example, I enter into this here, and then it moves down, moves back up. It doesn't trigger my second entry, and then I hit what would be my theoretical TP1. I would actually cancel the other entries and just allow that to actually run up.
Okay.
That's
Okay. I like that.
that's how I.
I find that I trade, well, I've been trading kind of similar approaches where I've used multiple entries and staged into an entry. And sometimes the market would run and I'd say, well, look, I got 1-to-1, but I only got one entry filled. So I can't really call that a 1 hour trade. I have to call that a 0.3 hour trade because it was only one entry filled. And it's good. It's a nice way of doing it. And the good thing about that is you go, well, there was volume down here. I was correct. Didn't get to fill all my orders, but I'm happy enough with that. I was looking for the market to breathe and move from this level. It did it. A little bit of profit is better than no profit at all, right?
Absolutely. Yeah, 100%. I'd rather just a small profit than to actually not profit at all. Because if I was to go, okay, look, I got a high risk, I got a low risk, I got a medium risk, I'm just going to put it all in on a medium risk, then I'm thinking, oh, okay, look, I've just put all that and it's just missed. It's missed my entry. Whereas I could have had that smaller profit on that higher risk entry, but I've divided the risk. So I'm happy and comfortable with the risk, comfortable taking that higher risk entry, knowing that, you know what, it's hit it. If it does run the stop loss, I'm comfortable where it is. That's how I see it anyway. That's my views.
Okay, something's just caught my eye. Barry in chat, you're saying I'm in a short on EU, daily downtrend. So first of all, congratulations. You looks like you're in a monster winner at the moment. In a channel, rejected top of the channel, 4 hour inverted hammer. Now I've just gone to the 4 hour and I'm trying to find where this inverted hammer is. Are we looking at this? Are we looking at this candle here? Is the inverted hammer? I've got maybe this, maybe this one. I can't really see anything more specifically in this, but I'm definitely finding a lot of selling interest this morning. I mean, we might run through completely on this level. I'd be a little bit surprised if we run all the way through it without some kind of rejection or some kind of pullback. I've sized up a little bit too aggressively. I was actually testing something on the account. So we had a lot of limitation on this account of 15 lots. So I'll come in with my 15 lots today. The problem is I also wanted to see if it would allow a little bit extra. So I did put 5 lots on GU and the order execute. So it's only by pair that I'm limited to 15 lots on this. So you don't normally trade Forex and you're testing out some swings. So what's your bread and butter? If you're not trading the Forex market, what's your go-to? Don't say gold. Please don't say gold.
I pray he says gold.
Hopefully. Well, I mean, maybe you do trade gold. Maybe you can teach us some lessons here. The last time I traded gold is probably the last time I'm trading gold. I had 2 goes at it, got it wrong. I just can't read the price action on gold. It does not move in the same way that a Forex pair moves, not in the same way that I read it. So typically I like to just manage risk around structure points. Gold just runs through these structures. FX markets are really good for break and retest. We often see that the market will pick a direction, run lows, go lower, break, and then retest to the downside. We can see this at the 127 on GU at the moment. Now, I'm asking myself this question. Do I think the 127 level is going to hold? We're right on the 127. I can imagine a lot of institutions have their eyes on this number, especially with the interest rates coming out a little bit later. So definitely worth considering like where the market is currently at the moment, and can we formulate a trade idea of it? I like the idea of this because of how much buying pressure came in from this price point. This was the what was the news? GDP, I think it was yesterday morning on the pound, round about here, where the market rallied, continued to make this bullish structure, and is now coming down. Now we have tested it here and pushed up 12 pips. I'm anticipating that there's a little bit more volume still left on this level. And again, if the market wants to move to the downside, I'm happy to take a loss on this. But we can see at the bottom of the screen at the moment, we're taking on a little bit of water. EU is just not finding any willing buyers. Now, one approach you can do is you can wait for candles to come into the point of interest and you can wait for some kind of rejection. So this was my zone. Around about here, we can look at the hourly. We're getting absolutely no sign of buyers. We can drop down to the 30 minutes, same story. We can drop down to the 15, same story, still wouldn't have an entry. We can even go down to the 5. Now, maybe we could have got baited on this candle here. Looked like it was showing a little bit of bullish interest. And then you go down to the noisiest time frame, which is the 1 minute, and it just, look at that, just this beautiful channel. If the market made channels like this on a daily basis, we would all do incredibly well. So no buyers willing to come into the market at the moment on EU. So this is this is my analysis, halfway to drawdown and just one trade.
What's your thought on the 07101 level? I think we're gonna head down to that sort of that level there, and I think we're gonna start potentially looking at maybe a pullback there. That's where I'm looking at right now. That's my thoughts on the EU.
That's pretty much where my stop is.
Oh no.
Yeah, no. Let's have a look. Let's have a quick look.
If I just grab my TradingView chart up now for you guys, this is what I'm looking at on the euro. Now, this is my level here that I've put down, and we are absolutely tanking down towards it. Have put this area up here, but as you see, I don't think that it's having any intention of respecting that. Obviously, it's going to fill it, and it already has filled it completely. But I think we're going to come down to this area here. Now, if we look across to the left, just see what sort of information it could give us if we do look to the left. Now, this is on the 15-minute. Now, we had this level here. Excuse me. We had this level here, and then we started to move up slightly. So part of me, I feel like it's going to respect this sort of this buy structure, this bullish movement here. Part of me thinks that it's going to head down, take this, and then we're going to start potentially looking at coming back up. That's what I'm predicting at the moment, but obviously price is so bearish at the moment. It will be interesting to see how it goes. Having said that, maybe I'm hoping and praying because I'm in a GU long. So, and we all know that EU and GU do somewhat correlate with each other. So part of me thinks that it's going to come down, run this low, sweep liquidity, and then start moving back up. But we'll see. That's what I'm assuming here. That's what I'm predicting could happen. But Rich, I'm sorry if that's your stop loss because that may be my entry.
Jordan is saying in the chat, are we catching falling knives, gentlemen? It certainly feels this way at the moment as the market runs straight through my price point. Good technical trade. Really like this trade. We had a lot of volume in this. If we buy into the idea, we spoke about this several times before, a fair value gaps drawing from this level to this level, you'd already say, Rich, what are you doing? Market has already come into this, tested it and pushed off. Maybe that's the thing. I mean, I'm trading for different reasons around this zone. I like this area as there's just so much volume come out of it. The market has already shown me, hey, we've got buying interest in here. Now I'm looking at this as a zone, and I think just under this, we might have quite a few traders be willing to have a go at buying this. So I position myself in accordance to that. Now I haven't sized up on GU. We're holding around about break even on GU. This is looking pretty good for a break and retest short. I think if the market can pull back to this level, and we'll see if we can still be in the trade as it does it, I think this would make sense for the market to now break and retest lower. So because the market has come so low, there isn't a huge upside available. If the market was to turn now, I think I would be willing to swap this for shorts into this level and try and trail down into this low. So it's all about trying to time that move. If I was trading with 0.01s and entered here, I'm pretty confident I'll get a profit out of it. The problem is I'm going to make $3. It's just not going to do anything significant on the account. So we'll have to see. But give us a shout in chat if you're in anything at the moment, you want us to have a look at the charts. One of my favorite things to trade is the DAX. We get this beautiful run on the buyers. We get this bearish hammer here, and this could be a potential short trade. We did manage to get a nice opportunity out of the DAX the other day. I think we made about 0.5% on it. I've just probably don't want to be too exposed into the market. I've got some exposure on the USD at the moment. So going in on the DAX, I think, give me a little bit too much to track. I can see at the bottom, I know this number reflects kind of a pip value of where I am within that trade. If I start putting a trade on this, I'm going to get all sorts of numbers moving around on the bottom, and it'll be a little bit harder for me to track that. But it would make sense in my mind. Market has driven higher. It's just going to keep going till it finds sellers, and it looks like it may have found sellers in this candle. So I think we'll keep an eye on this one. I would be looking for a move to the downside on this, but I'm not going to trade it. Same reasons. Can't manage too much risk across the board on these pairs. Let's run through some other pairs. This looks pretty good. This looks pretty good for a nice little zone to the downside. Round about here. Again, same reason. Not going to take on too much exposure, but I'll be looking for the market to come into this zone and start pushing away. Now, it doesn't matter if it does this round about news events. News events are so erratic. So I wouldn't be looking to catch this on news. But if the market can start to trickle down, I'd be interested in seeing a little bit of buying pressure coming out of that. Gold, no, sorry, silver, just doing silver things. I'm so glad I cut this. Where was I trading this? I think it was like in this leg here. Look how far silver dropped. Wow, silver dropped nearly 10% before it found buyers. Sounds like investing to me. No, we're going to get off that before we get in trouble. Barry's in a DAX short. Did you take the DAX on the 15-minute candle close, or were you using a different criteria on that? Paul, how did you find the Mare indicator on yesterday's stream? The Mare indicator is something else. So for those of you that don't know, I had the opportunity yesterday to be on one of the 5% of streams, and Alex uses this Mare indicator that has a 100% win rate. I'm not going to go into detail. It's his concept, but it's very, very surprising. So I had a long trade on EU yesterday, and it held pretty well. It held pretty well until it didn't, and then eventually it sold lower and failed. But it was good fun. It was all good fun. He caught a monster, I think, on gold to the long side. Gold has dropped a fair bit. Caught the trade. Let's have a look. That's silver. Where's
People at the moment are trading gold more and more. There's a few traders that I speak to. They say that they're sort of edging into gold.
Mm-hmm.
Is it something that you'd be willing to do, Rich? It's certainly not something
No.
I'd be willing to do. I've been burnt way too. I've blown way too many of my own personal accounts, let alone funded accounts, to actually even consider diving into gold.
So when you say blowing a personal account, do you mean you are not just getting a margin call, you have taken a personal account down to zero?
Oh yeah.
Okay.
Yeah.
Okay.
Yeah.
Okay. That was with a laugh in your voice. You're like, oh yes. That's
Many
my
times.
party trick, then, you know. Okay.
Yeah.
Yeah, that's been a long time since I took a personal account down to zero. Long time. That was probably 4 years ago. And yeah, no, I don't even know what it would look like to try and do that. I guess it'd be the same, right?
Say again.
I guess it'd be the same as taking a prop account down to zero, right? Could we call it the same thing, or are they different things?
I mean, psychologically, yeah, probably, yeah, 100%. You know, it's still gonna have. You should still have that danger effect to yourself. You know, you should still feel like you're trading it the same as you are trading a personal account. Obviously, the same with risk. The only difference is obviously smaller P&L. But yeah, I think you should definitely treat it the exact same, whether that be through risk or through actually psychology of trading the account. But yeah, I think the last time I blew a trading account was about 2 years ago, and it was with gold.
So what's more devastating then? Losing a funding account? We were talking about this yesterday. We're not going to use the word blown. We're going to use the word hit maximum loss on the account. What's more devastating, hitting maximum loss on a personal account or hitting maximum loss on a challenge or funded account?
That is a fantastic question. I mean, I guess it depends on what the account equity is at. If you've got 10K in a personal account, then I feel like if you're going to hit maximum loss on a personal account with £10,000 in it or $10,000 in it, that's going to really, really hurt. That's 10,000 of your own pounds, dollars, whatever currency you're using. That's 10,000 of your own money down the drain. Whereas I feel like if it's with a funded account, $100,000 funded account, a 100K account is going to cost you what, $599. So it's that 400 odd quid, 500 quid. I feel like there's less monetary value that you're at risk, but I think it's more devastating how much futuristic value that you've now blown down the drain. Because obviously, funded accounts are a fantastic way to earn money that you physically cannot put into an account. It's a great, great way to earn money that you couldn't earn for a long, long time unless you really, really compound an account for years and years. I think the idea of what you have lost, futuristically thinking, is absolutely heartbreaking and devastating. But I think if you were to let's call it the same account. Let's say you had a £500 personal account and you had a £100,000 funded account.
Okay.
They should. I feel like the funded account would be more devastating to lose
Why?
because you lost £500 and you lost the ability to make 2% a month, which is potentially $2,000 a month.
I disagree. I have to disagree because on a funded account, you've got 1 to 100 leverage, typically. Okay. And you have 1 to 100 leverage on the entire balance. You can't lose the entire balance. You can only lose the drawdown. The drawdown might be 10% of the account. That now means you don't have 1 to 100 leverage on the drawdown. You have 1 to 1,000 leverage on the drawdown. You can fat finger a button, lose that account in less than 5 seconds. You lose a personal account, you're probably limited to an FCA regulated UK broker with 30 to 1 leverage. You've got to all in that account and hold that thing for about 400 pips until you have pretty much margin called the account. How can that be the same thing? They're very, very different things. I understand on a P&L value. Sure, you lose a funded account and you're like, oh, I'm not going to get payouts anymore. That sucks. But what does it tell you about your trading? You could fat finger lose an account and it just says, hey, I'm a bit clumsy. You lose a personal account. Very different things. That's just my thoughts. Something to think about on that. Joshua, welcome into the chat. Just something to think about on that.
It's a great, great thought. That's a great, great point. I see what you mean. Obviously, depending on the providing you are using an FCA regulated broker, then it's a 1 to 30. Then it's going to be harder to margin call the account. Now, having said that, it should be pretty difficult for you to margin call an account or hit maximum drawdown on a funded account. I feel, but I don't know. Maybe that's the risk management in me. I feel like
we have a professional in chat. We have Barry saying, I'm an expert at losing money. I can assure you it hurts, whatever account you're in. I agree. It's less than ideal. But if you can hit the maximum loss allowance on that account and learn what you needed to about yourself, it's a good lesson. In the early days when I was trading, I took on lessons that were way too expensive and I didn't learn anything from them. So they were losses. But if we can take on good lessons, what are we up now? We're down a couple of percent on this account. We've been trading this account for 4, 5, 6 months. I mean, it's like I've had a lot of opportunities to reflect on what I'm doing on this account. I've learned a huge bunch of stuff, and what we see on this account doesn't reflect entirely my trading activity. This is a lot of the time we trade the likes. The allocation of the lot size isn't my own. We have a little bit of fun with it. Yesterday, Jordan was saying, Rich, I want you to put on 10 lots. I want you to manage risk around it. We're trading within a window as well of about an hour and a half. So it's definitely a different result on this to what I achieve on my own accounts, on my own funded accounts, on my own challenge accounts, on my own personal accounts. So definitely different. But the learning opportunity on this, if we look at a $100,000 account, $500, I mean, well, I'm into $100 of that potentially. I'm $100 down through the account of what it cost me. I don't know how many trades I've placed. In fact, let's do it. Let's have a look at this. We're going to go to history. We're going to go show all. We've got all history. Look, and you can just see the amount of opportunities and activity that I've had in this account has been dozens and dozens, if not hundreds and hundreds and hundreds. So, I mean, we've paid over $2,000 in commissions. So I don't know how many trades that is. If we look at $4 a lot, if someone wants to do the math, $2,200 in commissions. In fact, I'm pretty close to break even if we weren't including the commissions. But including the commissions, how many lots have I traded? Who can do that math? If we're looking at $4 a lot. So 40 lots, $40 would be 10 lots. $400 would be 100 lots. $4,000 would be 1,000 lots. So we're probably looking around about 550 lots have been trading on this account. That's a huge amount of exposure that's given me an opportunity to learn about myself and about the way the markets move. And I'm still not anywhere near the max loss limit on the account. So learn your lessons as cheap as possible. So Barry, when you say you're an expert on losing money, I hope we can reframe that over time to say, I'm an expert at learning lessons very, very cheaply. My big mistake was I came in with too much size. Jordan does this wonderful thing where he says traders think that if they don't have enough money, that's their problem. The only reason they can't make money is because they just don't have, they're undercapitalized. They don't have enough money. I come into trading with the opposite problem. I didn't have the skills and I was probably overcapitalized for my skills. I should have been using about £100. I wasn't. I was using a little bit more than that. So reframe that. Change that to I'm an expert at learning lessons on the cheap. How's your 20K boot camp going? That's a good question. All right, let's have a look at this. 20K. Do you mean this one? Do you mean this one on the do you mean this one here? Are we talking about this one? Or are we talking about something else? If we're talking about the $1 boot camp, that's a different story. Misha's saying 550 plus. Yeah, that's a lot of lots. Yeah, this account here, I had 12 days where I wasn't trading it. So if we look at the history today, you can see I just put a couple of was it today? Yeah, just down here. Just put a couple of orders on today just to get a couple of tiny movements on the account because I don't want the account to expire. But this account's just sitting in a 0.5% profit. Not doing too much. Market's been a little bit quiet at the moment, so not getting too committed into trades. But yeah, this one on the stream, just I've now got it rigged up to my copier, so hopefully we can get some gains on that a little bit quicker. But interestingly, look at this bounce here at 0712. Now you said 0711, I think. It's pretty close. Market's starting to pull back now, around about 7 or 8 pips from this low. So we're starting to see the P&L recover ever so slightly on this. I'm going to stick to my original analysis. If the market can pull back into, yeah, this price point here, I think if we have an opportunity and we're not stopped out on this and the market pulls back to about 0728, I'm going to be looking to either trim out or fully exit this position. But patience is going to be the game at the moment. But the $1 20K bootcamp account, I was speaking to a friend of mine, Abeko, and he was saying that there was if you get something for cheap, very often it goes pretty quickly. I think traders don't appreciate things that they can get very, very easy. So yeah, there's a lot of times that actually having a big account and having skin in the game, I think you respect it a little bit more. Martin saying my bootcamp 2 EAs trade two EAs trades from breaching it. Is that phase 1, Martin? Sorry, Will, you were gonna add?
I slightly disagree. I think it shouldn't matter the size of it. Having said that, I think you are going to respect it a bit more if you. I think the psychology of yourself psychology is going to respect it a bit more if it's a higher value. I think if you're just going to chuck, let's say you have like, I don't know, you think, oh, I've got £1,000 here. I'm just going to have a play about with Forex. I've learned for the past year. I feel like I know what I'm doing. I've got £1,000 to risk. I'm going to chuck £400 into an account. I think you're definitely going to think, oh yeah, it's just 400 quid. Who cares? Yada, yada, yada. Whereas I think if you were to actually spend 400 quid and get £100,000 account, $100,000 account, you're actually going to think, oh, actually, I've got $100,000 here. You are going to respect it slightly a bit more. Having said that, I feel like if you'd think to yourself, maybe you've just mastered that mindset straight away and you thought, you know what, I don't care. I'm not going to be a P&L trader. I'm just going to trade the percentages and I'm just going to trade what I see on the charts. I think funded accounts are a huge, huge way to, like you said, Rich, make those cheap mistakes, make those cheap lessons. I think if you were to put, I know that you can get like, I think it's 25k for like 170 quid or 100 odd quid, or maybe 120 quid. I can't quite remember, but it's around about 100 quid. It's no more than that for like a 10 to 25k account. Now, 10 to 25k, that is going to be absolutely huge for a lot of people. You don't need to go with these massive, massive 6, 7 figure accounts, but you can look at these sort of smaller accounts, respect them, and oh, Rich, we've lost you.
Oh, that's odd. Look, I'm going to stop
I feel
you.
like you
You're only
disagree.
talking about you're only
I
talking
feel like
about one side of the coin, because I know so many traders that have ran through over 20 challenge accounts. Like, and it's I'm going to say it's not to be ashamed of, but I know so many traders that have back to back gone through dozens of accounts. And the reason is because of exactly what you're talking about. Only thinking about the upside. It's cheap. I can get this account for $100. I can lose $100. And the problem is they lose $100 again and again and again and again. It's like a cat with 9 lives. It's just one life. It's just another life. And this is the issue, because when we look at something as, hey, it's easily replaceable, what do we do? We treat it as such. In the same way, if you went to the gym and you're like, there's only one gym for 100 miles from where I live, and then you get in a bit of a debate with that gym owner, you're going to do your best to make sure that you can still go to that gym. If there is 1,000 gyms within a 3 mile radius, same as challenge accounts, just pick up another one. Just pick up another one. What are we learning about ourselves with trading? What are we learning about ourselves when we take on an account and we go, I don't really care about this. It doesn't really mean too much to me. I think that traders that start burning through these accounts are doing so because they have a level of, just doesn't matter to me. It's only a cheap account. It's only a small account. Would you put £100 in a personal account and burn through that 20 times? I don't think you would. I think traders are, and it's not even, I think the traders that I've met, and I've met hundreds of traders, the traders I've spoken to are far more keen to put money into the prop firm accounts because of the leverage, the excitement, the challenge. You put £100 into a personal account, you grow that into £150. Then what? What do you get? You don't get a certificate. You don't get a medal. You don't get a scale up. You don't get a payout. You just get a little bit of profit. Not even the broker phones you up, well, sometimes. And they don't even go, hey, we're really pleased with your results. Congratulations. Think of the feedback loop you get from prop firms. You get a certificate. I used to have certificates up on my wall. I was like, when I got my first certificate, I was like, look at this. And then the prop firm wasn't around much more, and it was just like a bad stain on the wall. I was like, okay, I'm going to have to remove that. And then I got another certificate and another, and I was collecting them like Skittles. I was like, I want all the certificates from all the firms. Wheels fishing around trying to find us. There we go.
Funded next. My first ever prop firm pass. And I kept it, and I framed it. The other ones I don't care about, it is what it is. You win them, you lose them, you win accounts, you pass accounts, you blow accounts. You start realizing it's by the by. But my first ever prop firm account pass, put it in a frame and all. It's one of those things. It's that excitement. I think I did a monster lap of honor when I found that, when I got that certificate, and I was like, congratulations, you passed your account, blah, 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 blah. I was like, oh my God, I'm like Jordan Belfort over here. It gives you that excitement. And yeah, I framed it. I didn't actually hang it up when I redid my office. So it's just sitting there in one of my files.
Jordan might be one of the only traders I know who actually took a trade, I think, on his personal account. It was a profitable trade and he framed it. I think so many traders are more about, I want to get that certificate. I want that certificate. I want that. That certificate certifies me as a good trader, a profitable trader, a risk manager trader. Does it? Does it? I mean, Will, when you got that certificate, your first ever funded account, was that, I mean, sure, it was a milestone in your trading, but was that the absolute epiphany of I've made it now.
No,
I'm a profitable trader.
no, it was for about a week. For about a week, I felt like, I was going to get called by BlackRock and offered a job. But no, once the novelty wore off and you start realizing, you're on to the next milestone. Certificates are certificates. You don't care about them. You don't care about them, and then you start to realize that the trading is like once you're in the thick of it and you're actually getting into that deep trading mindset, then it's like you start realizing and being proud of your trading more than you're proud of the gimmicky bits that the prop firms give you. Like, don't get me wrong, it's still a fantastic thing, and even now I love receiving a certificate. It's brilliant, and everyone does. Everyone, it's like that unofficial congratulations, good job, pat on the back. We all like it. It all feels good, but I think you start to realize that whether you have it or don't have it, or no matter how many times you earn it, it doesn't really matter too much. You start to think, you know what, happy days, move on to the next one. And you start to realize that you're just enjoying what you're doing more than receiving the gimmicky sort of congratulations. That's what I did.
Okay. I've got a thought here. So Misha's saying, imagine being a trader 40 years ago without all the possibilities we have now. I think I'd already be dead. Now, when I think back to when I first started in the industry, I wasn't trading prop. I wasn't trading prop for probably 2 to 3 years. So I'd say I've only been trading with prop firms for about 3 years. And when I discovered prop firms, it was like a kid in a sweet shop. It was. It absolutely changed everything for me. Now, I'm curious, how many traders would continue in the industry if prop firms were no longer available? In fact, let's get a poll up in here. Jordan, I see you're busy flexing with your $1, 1 cent profitable trade is your pride and joy, and it deserves to be on your wall. But there it is. Fantastic. So if props were not a thing, would you still be a trader? And do you know what? Without prop firms, that scaling road of trading personal money, that roadmap changes so much for me. I would still be a trader, but I'd feel like the brakes are on. So maybe I'm looking at prop firms as, hey, they are an opportunity. They are an amazing personal capital tool. I mean, we spoke previously about an account I had, and I received over a 2,000% return on investment. Where can you get that? Like, where can you get that kind of return on investment based on your purchase price? What do we got at the moment? This is 25% of traders are saying at the moment, I wouldn't continue trading if there weren't such a thing as prop firms.
It's pretty interesting. Rich, I've got a question for you personally. Would you continue trading? Would you continue trading right now? If prop firms thought, you know what, this just isn't working anymore, we're done. Would you continue trading?
Yes, through gritted teeth. I would continue trading. I would. But my roadmap would look so different. So right now I'm on a journey of trying to achieve and build towards $2 million of funding. I'm probably not going to go into too much personal detail on kind of where I am within that journey, but that's a figure I set up and said, hey, do you know what? I think it would cost about $10,000 worth of funding accounts to do it. So that would be my business plan. Now, if I had $10,000, how would I put that in, and how would I use that? I wouldn't just buy, 20 accounts and just go for it, because I'm not in a position where I want to take on a $10,000 loss. But I was thinking, okay, what would it look like if I was to start slow? So I did. I took on a small account, a 5K account, and got payouts on that. I did 700-800, somewhere around about that. And I looked at this and I was like, okay, now that can go into another account. Let's build that up. So I had another account that was with another company, my Forex funds. Lovely little account, just I think a couple of percent away from being a live funded account in phase 2, and woke up to that wonderful email that I think we all got. And it was sort of looking at this and saying, okay, that was perhaps not the best investment. how can I use the payouts? How can I use the capital? How can I grow it? And it's really simple. I've got a roadmap marked out on the milestones I'll have to achieve and how I reinvest that capital. Now, there's a key word there, reinvest. I'm reinvesting. I'm not keep going back to the savings pot and just chucking good money after bad. I'm reinvesting based on a track record. Now, I might be trading a $100,000 account. Now, my job is how quick can I earn enough to take on another $100,000 and another and another and another. And every time I do something stupid and I hit a drawdown and revenge trade, I lose that account and I start again. And obviously, I don't do that, but that's the journey I'm on is working out how quickly I can scale. Now, when I get to 2 million, I'll have a 200,000 drawdown, give or take. Well, I think I can do pretty well with that. And that's going to put me in a position where I can build personal capital so much quicker. So if you said prop firms aren't a thing, I'd have to redesign the way that scaling looks. And last year I did about 40% in the Forex industry. But 40% of what? A pound? A million? So that's my job, is to try and get that pot bigger, because I'm not trying to make necessarily more as a percentage gain. I'm trying to diversify, and I'm trying to get that sort of stable and more steady income through trading. And I need a bigger pot to do it. And prop firms are the link in that chain that I think bridges it all together. So we're incredibly blessed as traders to have the opportunities we have. Very long-winded way of saying it, but I would see the industry would probably lose a lot of traders if prop firms weren't a thing. I mean, what would content creators make videos about, right? If they didn't have the opportunity for that, they'd have to show their personal accounts.
I was going to say that's really interesting that you touch on that, to be fair, Rich, because I'm sort of heading down the road in my trading sort of career at the moment, thinking, as much as I love prop firms, do I want to be relying on a prop firm? And as much as I'd love to say, yeah, absolutely, prop firms all the way, right up until the day I retire myself at 25. I'm kidding. Until I retire myself eventually. Truth be told, knowing me in this job, I probably would never retire, because it's a job you can do forever, unless I get stressed at an older age, and bugger that. But it's more something that I'm thinking, do I start looking at going down the personal fund route? And it's at what point do I compound my account enough to say, you know what? I'm gonna take a back step on the funded accounts, or will I ever take the back step on the funded accounts? And I've hit that sort of crossroads in my life where I'm thinking, where do I go? Do I stick with the funded? Do I sort of move down the sort of personal, or do I see if I can sort of run the both simultaneously? And it's something that I'm considering, sort of thinking to myself at the moment. And that's where I am with my trading. And if you said to me, would you still trade if the prop firm accounts weren't there? I'd probably tell you I'd probably move away from the prop firm accounts eventually, even if they are still there.
So do you see the prop firm accounts as the quickest way to build your personal accounts, or do you think businesses is? Because Jordan says, does it alarm anyone else that not one person is seeing heading into traditional firms as an option? We almost don't even cover that on the channel. Why do we not consider that a traditional firm, like a hedge fund, or working for a traditional firm, is not an option? Is it because they don't market in the same way across the entire internet, that they don't gamify the trading space? Is it because it's not almost like a game that, hey, can I get funded? Can I get a certificate? Can I get a payout? Can I get a I mean, I got offered. Yeah, I mean, it's just, I'm curious. Will, share me your thoughts, please.
That's a great question. And I think it probably is to do with the marketing. I think prop firms are right up in your face at the moment, especially on social media. And I think it does, without actually promoting it, bit like in your face, but without you realizing, it does promote that sort of get rich quick scheme. They're going to promote the best of the best. They're going to promote sort of the best traders with their £100,000 payouts. They're going to promote that sort of scale up to 4 million, 5 million, even though that probably 3 or 4 traders are actually at that stage where they are scaled up to 4 million. I think that they're going to promote that, and it's going to be like, oh wow, we can actually do this. Oh my God, we could. And they're going to promote to the people that don't really have the biggest idea on trading and think, look, jump in board with us. We'll hold your hand all the way. We've got educational content out here. We'll look after you. Don't worry about not being profitable. We'll help you get there with our funded accounts. I think with a proper firm, with a fund, they're not going to say that to you. They're going to say, are you profitable? No, not yet. Can you help me? No, bugger off. Come back to me when you're profitable. When you're profitable, then we'll offer you a job. I don't think people want that. People want to be told that they'll be spoon-fed the information, you know? People want to be told that we'll help you become profitable. We'll give you $4 million in capital to manage. You know, we'll help you scale up. That's what they want to hear. They want to hear that they're going to be helped and spoon-fed and encouraged along their journey to profitability. And I think that's why prop firms get the real good shout.
But they want a track record as well. And if you, I mean, I asked a good friend of mine who, very, very seasoned, good trader, and I said, does a track record count on a prop firm account? And they said, no. No, absolutely not. I'm like, well, that's my last 3 years of track record has been on prop firm accounts. And they said, well, can you show it? I said, no, because it's been across about 10 different accounts. Because there's been a few times where, you know, sometimes they're just not always in a position to be able to use the same accounts again and again and again. I mean, how does it look when suddenly your account size doubles or you get a scale up? The equity curve goes completely different to what you'd see on a typical normal account. So I know a really good opportunity for building your personal accounts is either Darwin X or Personal Capital. And so I set out on the journey. I was like, okay, it's not about making money now on a personal account that's massive, but it's actually about building a track record. Something that I could take, as Jordan says, to a traditional trading firm or an investment firm and say, hey, look what I did. I manage risk really well and managed to actually get ahead of the S&P 500 or something that would, you know, an investor would look at and go, okay, the numbers speak for themselves. There's a lot of different ways that we can measure this and look at with this. But yeah, I know getting a loan from a bank and trading that, Des, please no. Please no, do not get a loan from a bank. I'm going to assume
That's
you
amazing. I love that idea. I mean, if you're super confident, you know, and you really know what you're doing, still, please don't do it. But
think of the risk you bring on yourself by going to the bank saying, hey, can I have a $20,000 business loan? I've got this beautiful, you know, business idea that I'm doing, and I think I've got sales and I've got a target audience and all this stuff. And then dumping that money into a trading account. Imagine burning through that account. That's an expensive lesson. You've still got to pay back that money. You've got all the interest on it.
Oh, God, yeah.
Terrible idea. Des, no.
Oh my God, just the thought of that, the anxiety of just, I mean, the potential though, there is definitely potential there, but oh God, by God, that comes at a risk. I couldn't stomach it. I don't think I could stomach it.
I've heard some people say in future, just, you know, the smartest money you can use is someone else's. And if you start thinking about family and friends, I think Jordan has a very interesting story about sort of like what it's like to trade other people's money. And I'm sure he shared it was something that he doesn't care to repeat. The good thing about trading with prop firms is it's a cyber relationship. It's not like you've just lost money for your mum or money for your best friend.
Yeah.
You've got I guess a very professional relationship, and they have the correct expectations. I think sometimes in the real world, people will look at, you know, what are you doing? And it'll be like, oh, this guy makes money all the time. I'm not Will. I don't make money all the time. I'm not Jordan. I don't make money all the time. I'm not Aaron. Aaron makes money. David makes money all the time when David comes on here. Alex seems to make money all the time. I'm a profitable trader, but not on a daily basis, not on a weekly basis, and dare I say this, sometimes not even on a monthly basis as well. Can you imagine that? Working your job full time, knowing minimum wage could pay you $2,500, and you just worked the job full time, you didn't get paid for it, and then you lost money. You've got to reframe that in your mind to make it look pretty attractive to want to turn up the next month again and again and again. I swear, traders are some of the craziest people out there. I swear they are.
Yeah, I'd be tempted to agree with that. And yeah, I've met some traders and they've put like £50,000 into a personal account. And I mean, hey, they've traded it and they've earned money from it. Let's say, for example, they've whether that be with a business of their own or whether that be actually with inheritance maybe, or whether that be through savings. They've put money into an account, personal funds, and they've earned money and they've created a living with it. But that is nuts. That is that they're going to be putting their own money at risk and saying, look, I'm going to do this. Whereas opposed to a lot of safer traders that I know, and I know a good handful of these traders, myself included, are one of these traders. I will use a prop firm payout money and I will use prop money to fund my personal account. And that's free money. It's money you've earned to put into an account. It's not money I've earned externally to put into trading. It's money money I've earned through trading to trade. And yeah, that's how I look at it. But traders, yeah, some of these traders that I've met just put lump sums in and trade it. Yeah, so you've got to be a different kind of brave to actually stomach some of these losses that some of these guys take, and just to keep on trading. It's brilliant. And I think to be a trader, you've got to be really okay with the fact that you're going to lose a lot of money at some point, whether that be now or in the future, or you've already lost it. It's definitely a lesson you're going to learn, and it's 100% going to happen. And I'm confidently, Jordan, I know for a fact it's going to happen. It is going to happen. I don't know any trader that has earned money from day one. I really don't. I don't know. People want it to happen. People want to earn money from day one, but no trader that I've ever met can honestly say, hand on heart, that their trading journey has gone exactly how they wanted it to. Rich is going to tell me he never lost money. He's just only ever earned money now.
No, I'm trying to think of one trader that I've met in my library that actually said, you know what? Trading played out exactly as I wanted it to. Sam, the trader, was so confident and said that they experienced going to the bank, taking out loans to buy prop accounts. It didn't end well. Learned my lesson. I will not do that again. Sam, I want to just take a moment to say thank you for sharing that with us. That's something that, a lot of us in the background, quietly, we're struggling with our trading. We're working through drawdowns. We're working through mental issues. We're working through risk management issues. Hey, I'm always so greedy. I'm always so fearful. And to come out and say that, it's a beautiful message, because it gives our audience the opportunity to go, hey, it's not just me. I'm the one that tried to get ahead by doing something stupid. I'll share a story. I'm happy to do this. I took on a $200,000 prop firm account and traded it at 4% risk. I was in a hurry to get somewhere. Where do you think I got? I lost $1,000 of my own money in about 4 days. That's what happened. And that left a scar that I said, I'll never do it again, because I was trying to get somewhere quick. So I really like to sort of follow the idea of patience. It's a marathon, not a sprint. It's such a cliche thing, but until I meet a trader that comes into this and says, yeah, I did exactly what I thought I would. I got in this to make money. I made money, and I'm in it 10 years later. Most people I experience or come across in trading, they get in, they get out. Trading isn't what they thought it would be. They thought it would be a cash cow. It didn't play the way they wanted it to. So take from that what you will, but I'm curious. Richard B saying, I'm a self-employed contractor and a company I was working for has just gone bump, taking me for over 10K. What's the difference in real life? I think in business, there is a lot more risks, or from a self-employed perspective, there's a lot more risks than what there are potentially being employed. Take your own perspective from that. I've been self-employed for, I don't know how long now, 15 years maybe. I've probably only been working, I don't know, 30 years. No, not 30 years. I've been self-employed, I think, more than half my working life and never had stability through doing that. So I'm sorry to hear that you went through that. And as you say, in trading, what's the difference? What's the difference when you're working in the financial sector, when you're working with prop firms, trading their accounts? We've seen many prop firms just come up and off they go again. White label prop firms, I believe they're called, where they're not really backed significantly. So the same as you would, I guess, for as a contractor, you would do your due diligence on the company that you plan to do work for. And it would be the same with this space. I would never ever get into bed financially with a prop firm that I hadn't literally sat down and read all of their terms and conditions. And it frustrates me when they change and they don't update their terms and conditions because I might get a breach on an account for something that they said, something they never even made known. And it's like, so it's my job to, and it will say in the terms and conditions, you must keep up to date with our terms and conditions. So every
Yeah.
single day, I'm meant to rock up and read your terms and conditions every single day. It's not realistic. We've all got real lives. We've all got, you imagine you were in three positions right now, GU, EU, and the DAX. Oh, hold on a minute. Let me just go to the terms and conditions page and let me just read a 2 hour article every single day to make sure nothing has changed. There is risks. Absolutely, there's risks, but we can do things to mitigate that risk, and it starts with financially. I should imagine after you went through that experience with that contractor or with that company, you will do your best to never put yourself in that position again, where the losses could be so significant. Much the same as myself with a 200K funding account. I will do my best to never put myself in a position where I'm exposed to lose $1,000 of an account over 2 to 3 days. And if I am in that position, it's because I don't care about $1,000. But at the time, oh, I cared about that $1,000, and that stung. That was a painful thing. We can see that we're pushing up on EU, starting to see a little bit of recovery coming round to about break even on this. Now, I've got an interesting idea. You can see I've got some notes on this. So possible for a pullback and sell, BAR, break and retest. Break and retest would look something like this, where the market comes back, and I'll be looking for the market to basically break the low, pull back, retest the price action, and continue to the downside. I'm not going to do it yet, but you can see just to the right, we've got this little alarm. When this alarm, or if this alarm sounds, I'm going to be coming out of all of my positions, including EU, and I'm going to be going into GU as sales. Markets produced enough information for me to say that I want to be getting, I was looking for a bounce here, didn't get it. I may get an opportunity to not get stopped out on this and adjust my position. That's what I'm going to be looking for. So until we hear that bell ring, I'm not going to adjust my positions, but possible breakout, retest. And then on this, we've got a choppy price action. I'm going to consider managing the risk. Now we can see these top three orders on the screen, 140, 30, and 60. They are my kind of floating P&L on the Euro USD. So I'm not going to be cutting this too soon, but I think it would be good to consider managing risk around this. Now, we've got this beautiful big bullish candle that's coming into the market. It's finally starting to do what I want. I'm not going to cut this just yet. I'm going to do it from a technical reason. And that technical reason is what GU is doing at the moment. So round about 2705. I heard some noises on your chart. What have you been doing, Will?
Yeah. I had my TP. If I bring my terminal up for you now so you can see what I'm looking at. I had my TP up here. This is where I was looking at. My TP was up this level here, around the 27,152 level. Now, I put this level here because this is where I saw potential liquidity in the markets. This is where I saw if price is going to come up, I want to see it close above here. We had rejection. We came up, whipped, and pulled back down. It's not what I wanted to see at all. That's not what I wanted to see. I wanted to see a bit more bullish pressure coming in. Having said that, however, I have entered also in an EU buy, oh no, wrong one, just temporarily. And I have come up to around here. Again, price is slowing down. I wanted to get on the breakout, but it looks nicer on my trading view. But having said that, we're still looking a bit sort of indecisive. And again, I don't like what GU's doing. I'm going to try and get out of GU as quick as I can before I lose too much money. But again, I'm not going to cut it just yet. I'm hoping we're going to have one last push up here before we start running further down. Having said that, we're at $40 on EU. I'm not sure what I'm going to do just yet. I'm not sure. I see it going up here before we sell off. I really do see it going up here before we sell off. But are we going to sell
We're
off
seeing the
after
pound hold at a good price point, actually. The pound has come down, bounced on 127, and we're holding, but we haven't pushed up enough. Now, this is one of the few occasions that I'm positioned in the market well enough that if the pound holds and EU keeps pushing, this is going to be good because I'm not cutting the EU position until the pound pushes a bit higher. And the beauty is the pound is holding. So I've got myself a nice little sell limit sitting, waiting on GU to be activated, but it's not yet. So as soon as we hear that alert, as soon as we hear that buzzer, that's my position to, or that's my opportunity to cut all of my orders. So we might see a bit of an upside move on EU before it actually rings the buzzer. This could be a good one. This could be a good trade. But again, not trading the P&L, just trading the technicals. So I'm going to be using any potential profit I can get out of this trade, and I'm going to be doubling down and using that on the GU short, looking at 15 lots short. Need to be quick because there might not be an opportunity to execute on 15 lots. So we can see on GU on the 1 hour, it looks a little bit messy, but the sell limit is activated right under this bearish pin bar. Get this beautiful continuation candle. I'm looking for the market to pull back. Just breathe a little bit higher. We only want another 3 pips out of this alert. I'm going to put alert a little bit lower. Going to have to be quick on this one. So we welcome EU to continue pushing up higher. If EU starts hitting into this price point before GU really finds any buying interest, if that's what happens, I'll be looking to cut EU. So the upside on EU is only another 7 pips at 15 lots, around about $1,000 upside. That's the most amount of profit I can allow the market to breathe because we are going to be running into this low, these wicks to wicks. We look on the 5 minute, you'll see it's much, much clearer. Got this beautiful double bottom down here. We speak about this when the orders are soaked up. What happens? The market just floods through. These can become really good SR flips. So I'm going to be keeping an eye on this very, very closely. We'll jump down to the 15 minute. See if we can find a little bit more buying interest. And funny enough, GU is still not able to pull up. I am very, very close to completely flipping my bias on this position. And because I'm using such big size, 15 lots, I cannot afford to give away even 2 pips on the entry. So either the market sells off from here and I was really close to adjusting my position, or the market can actually deliver really, really well on the profits and sell off as well. But it's struggling. It's struggling at the moment. We're around about break even. We've got 20 lots in the market and we are about break even. That's $200 a pip. That shows you how the markets are really struggling to find a directional move. Patrick's saying that he's finding your charts a little bit of a little bit interesting on the eye. What do we think in chat? What do we think to Will's charts with a bright blue? Are we a fan?
I have now taken
Are we a
out.
fan of that? And be kind as well. Will's only young.
Is it kiddish? Is it? Is it giving away my age?
No, I think I like it. I mean, Patrick
It is
has
very
our
good.
ideas.
Will, your chart gives me epilepsy.
We're
What
floating
were you
around
thinking?
about 350, $400 now in this trade. GU still not pushing up. GU is still about 2 pips away from where I want it to be. And we're floating $500 in profit now. We can see GU, and looking at this top order, trading $50 a pip, we can see that we're down half a pip with $500 up on this trade. And I'm not gonna cut this. I'm gonna try and execute this trade perfectly from a technical perspective. It still needs to push up. We can see that we're seeing buying interest coming in. Nice, beautiful, big bullish candle on the 15-minute. Close bullish as well. So we've now got 3 bullish candles print on EU going into the 0724 level. If this continues and GU holds, I'm still going to hold this trade. I want to say this will be a monster, but I need to be thinking only about the technicals within the trade. Frank's saying very hard to read. Jan is saying ugly. Des is the politest person in the chat at the moment, saying it's a little bit bright, mate. Andrea's saying I think you need an eye doctor. Yeah, we've got some interesting. Barry's saying what's wrong with red, green, and black. Myself personally, I'm colorblind with red and greens, so I struggle with red and green, so I have to go with something a bit different. But we always more than welcome to use red and greens if that's what stands out. $500 on this trade now. Let's look at the smaller time frame.
Are we thinking black background and red and green, or what are we thinking? Chat, I tell you what, chat, if you manage well before the end, we've got 15 minutes. We've got 15 minutes to help me decide on a new background for my terminal. So if you guys like a color, then drop it down, and if I like it, then chuck it in, and I shall change it there and then in front of you guys. But if it's awful, I am not keeping it. If you're going to suggest pink, it's not happening.
Failing that, there's a link in the description below this video for the Discord. If you're not in it, get in there, give us a subscribe, jump in the Discord. Feel free to chat with us in there. We share our trade analysis, trade ideas. Got some interesting stuff on psychology. That's where you get access to the full team. You've got David, I'm not going to list everyone. There is the team at TradeDelicious is growing. Just like this trade, we just popped up now. We are a pip away from where I want it to be. Gonna have to be quick on this. We're floating around about $500. Bulk operations, close all positions. This is horrible. I can't see the charts now. I'm relying on the sound and the feedback because my orders are blocked by this. How can I do this?
Yeah, I am all out for a £96 profit. I'm pretty chill with that.
Awesome. I love to hear it. That's what we want. We want green days on the stream.
Yeah, didn't like the way that GU was acting. It's still rejecting a little bit now. It's not seeming to close above that sort of trend line that I pointed out. So I'm not too keen on any further upside movement for GU. Potential sells, I mean, we've got that bearish structure, so it's definitely there. But I don't know whether I'm seeing it. I am liking the buys. Personally, I am liking the buys. But I'm not liking how the pound is just holding there and GU's just not wanting to do much.
This is so close to pushing. We've watched $500 retrace back to about $100 of profit. This is so close. I'm trying to time this to the pip. I really like this as a short entry. I think the market will pull back and sell lower from this. I think this is a really good opportunity, but I'm trying to time the entry. There's no reason for me to get out of the longs. I mean, sure, we're coming up to a zone that the market might pull back and it might say, hey, Rich, that was your opportunity. You had $500 on the table. That was your opportunity. You were greedy. You didn't take it. Well, why would I close my buy before I want to sell? I got 2 good price points. Why would I close that? I'm leaving $500 profit on the table if I close that early, potentially. And I'm not that hungry that I need $500 on this account immediately. More than I need $500, I need to be able to trade my technical edge flawlessly. And I need the feedback that that technical edge is either playing or not playing. That's what I want to see. But we've seen $500 go back to break even. We're now back up about 250, still holding this 127. Now, the only thing about GBP USD, I'm going to be selling into the 127 level that's starting to show strength. That's a question as to whether or not I should do that. I think I should. Obviously, we got 90 minutes, just over 90 minutes until the interest rate decision comes out on the pound. Now, I would be looking for a quick scalp on this 15 lot short position if I can get it. So I'm not going to be holding this right up to the doorstep of the news. Certainly not going to be holding this in the news. But if I can get it just prior to that, that's what I'll be interested in. So we'll see if it goes from here. Doesn't have to. I mean, trading is one probability. We've got to remember, just because I have a bias in one trade doesn't mean to say that this trade is going to do anything. I can tell you this trade is about a 62% win rate. I can tell you that. But I know it's a 62% win rate over hundreds of trades. And I don't know if this is going to be one of the 62s or one of the 38s. Today is a very, very interesting day with the fundamentals and the news that we have. What would it look like? What would it look like if the interest rate decision misses? Just like the CHF, if we have a surprise interest rate miss and the rates get lowered on the pound, that would be potentially weakness in the pound, right? Potentially, because investors would be considering other alternatives to get higher interest rates. But then we've got to ask how much of that is priced in. So if we look at USD CHF, did we? Yeah, same thing. So interest rate decision came out on the CHF as a miss, came out lower than forecast, and we see CHF weakness because the dollar rallied nearly 1% against the CHF as well. Food for thought. Food for sure. Food for thought on this. Are you gonna hold anything over the news, or are you just gonna sit in there and just watch it?
Yeah, I'm going to sit on my hands. I've got a little bit of admin to do on my computer, but truth be told, I may even just walk away from the computer completely. It's a nice day today down in Pembrokeshire, so I'm loving the weather. Tell you what, the weather yesterday was outstanding. I loved it. I think I've actually burnt the back of my neck. It was the first time in about 2 weeks we've had sun. So I was out and enjoying the weather. Truth be told, that's probably why my head wasn't quite in it all day yesterday. So, probably because it was sunny. So yeah, I'm just gonna go out, probably enjoy a little bit of sun, go grab a coffee, go do something, whilst the news does what it needs to do. And then as soon as the news is over, which is going to be after 1:30, so about 2 o'clock, half 2, I may look at jumping back in, taking a look at the markets. That's right. That's
You're
my
talking like it's a Friday. You're literally talking like it's a Friday. You'll give me that Friday feeling. I'm going to go out in the sunshine. So I'm actually Jordan and John are going to be doing the London live stream tomorrow. I'm actually taking a break over the weekend. Going to get away for a little bit, enjoy a little bit of sun, just as the UK turns sunny as well. So, did we make the right decision on this trade? We watched $500 profit pull back into a $300 drawdown at the moment. I made the right decision on this. I'm trading technically, couldn't care less about the P&L. I would have liked the euro to hold around about this price point while the pound pushed up. It would be just one of those days, I guess, if the euro pulls back to this kind of level, sits around here whilst the pound pushes higher, I will be forced to close all positions regardless of the P&L. Because as I have been accused in the past, I'm doing my best to not be a P&L trader, just to trade the technicals and what makes sense to me. So
EU out absolutely perfectly. It is pulled back down, excuse me, pulled back down to my entry, and I would have now been sitting around break even. I'm over the moon with where I've exited, absolute sniper exit. So I'm pretty happy with that. Just because I saw how price reacted, I saw it come into this level here, and then I thought, right, okay, price started to sort of show that hesitation on the 1 minute. As you see, it really struggled climbing up. We had that sort of nice big push up, and I thought, I'm pulling out here just because I'm watching price really struggle to go move into the upside. And now we are watching it come back down. So, well, as you can see here, quite nicely, it is it's actually below now where my entry was. So I am over the moon where I've exited. I'm pretty chuffed with that. I call that a good morning trading.
Okay, well, Des is saying, guys, with all this talk of floating P&L, isn't that bad for your health? Well, Trail Riding Days was saying earlier in chat about are you ready mentally to be trading a $2 million account? So part of the training, and this is something I've kind of come up with on my own is if I give myself the ability to expose myself to these price movements and constantly go, oh, we're only up $300, we're down $300, we're up $500. I'm starting to build that, what's the word? Not disassociation. I'm starting to build that. What is it where you go numb to something? You come on, help me out, Will. What's the word I'm fishing for? Where you go
When you just
law of diminishing returns, where you get exposed to something and after a while you just go, it's just my normal. If I can get used to that within $500 swings, $1,000 swings, $2,000 swings, then I'm only going to be looking at the master account when that happens. So my thoughts are, it's like, I used to hide this thing and just zoom out and just be like that. I'd just be like, right, okay, this is just, I'm in the trade now. This is how I'm going to look at it. And I'll be like, everything's fine here. Don't panic. Everything's fine. And it is. But I also know that there's a lot of accounts that could be moving around in the background based on this analysis. So by looking at the actual price action and trying to give myself a bit more exposure to what price is doing and go, okay, we're down $600. I'm still within my risk tolerance. I'm hoping to build that. I still can't think of the right word for it. Desensitization. That's the word. I knew it began with D. Desensitization. That's what I'm trying to do on stream. So is it good for my health? In the short term, definitely puts a little bit more pressure. But that pressure is what I need to get myself to a position where I can start trading these bigger sizes. Like we've got 15 lots up here waiting to be triggered on GBP USD as a short. And I can do that because I'm a little bit more comfortable with seeing this P&L moving around. Getting comfortable with seeing four figures moving around. Want to get comfortable to see higher four figures than five figures moving around. Obviously, I can't do that on a $100,000 account because that's going to be a little bit too aggressive. But yeah, no, it's definitely a good point that you bring up on that. And I think unless you're deliberately trying to achieve something with it, you're better off just not looking at it. If you look at these numbers and go, I'm down $1,000. I was up 500 a minute ago. That's a $1,500 swing. That's a 1.5% swing. If that affects you and your mental health, don't look at it. And for a long time, I used to shy away from it. Now I just look at that and go, hey, that's a byproduct of one good trade. And I really don't care about the P&L. I'm really trying to desensitize. I'm trying to become immune to the P&L. Obviously, if it goes down too much, there's only so much my immune system can take.
That's a good analogy, actually. I like that. That's a really good analogy. Trading P&L is like the immune system. You can take so much, but it gets to a point where you really do start to feel it.
I'll come back. I'll be in a drawdown. I'll be like, yeah, I got the flu. I've got the flu. Oh dear, what are we seeing? We saw $500 turn around going into a $1,300 drawdown roundabout now. So I'm going to go ahead and close the DAX trade just so that I can see the effective floating P&L on this. I'm going to update this trade in the Discord. There might not be too much to update in the Discord as we're going to pivot very, very shortly. So you all know where my stops are. They're just under, let's zoom out a little bit, just under this local low. If we can get under here and start running this, the market gave us false hope, got all the way down, went really close to the stop. We got this beautiful big bullish candle, and I was like, here we go. We were 1 pip on GU away from closing everything. I love it. I love the analysis of how close I was to the money. I missed it by a pip. That means on a different data feed, I might have got it. So choppy price action, the break and retest seems to have got me again. The market rallied up, pushed lower. I will leave this on. This has got another 90 minutes to hit trigger and see if I can get a scalp from the short side before the interest rate decision on the GBP. Remember, manage your risk. So you're going to be joined by David and Aaron for another episode of Not Buying It. We're going to take a short break. Stay tuned.
We want that money. I want the Lambo money.
You know what I'm doing? I'm buying.
Up or down. 140 for sure. The more you zoom in, the more impressive.
There's Tim Cook hedging against that already. This is the New Zealand dollar US dollar daily chart. Technicals, right? Price action is a result of fundamentals.
What really good earnings today.
We're looking at Brent's spot Brent.
Money
like being super rich.
morning, traders. Thank you guys so much for joining us here at Trade Delicious. Super excited to get the day going. This is another episode of Not Buying It. I'm your host with the mostest, Aaron, and the incredible man to the left and right of my screen, depending upon the orientation of your screen, is the Duke of Dollars, the Profit Professor, the Stock Sniper himself. David, how you doing, brother?
Feeling fantastic. I was actually having a blast watching Will and Rich trade on the London show. This was as exciting as I've seen Forex in a while, as I saw the P&L go from one direction into another, and the analysis being there and talking you through it in real time, giving you their thoughts where they were at, and kind of that feedback, talking about trading from a technical perspective instead of trading the P&L. How many of us have been guilty of trading the P&L and be like, you know what I could do with $500? Let me get the heck out of here. And so, you know, in terms of traders that I actually know, Rich is probably the most technical trader, technically biased trader that I know, and not so I wouldn't say intuitive, but I would say that he's not a discretionary trader.
No.
But we've got Jay, and Jay doing it tomorrow, not only for the morning show, but for the trading floor as well. So exciting times here at Trade Delicious, where we get to watch them put it into action on the trading floor tomorrow. You know, we had the day off yesterday in the markets, you know, here in the US. And I think that maybe I'm keeping my fingers crossed for a little bit of makeup volume coming up here. But we've had some things kind of still market narratives, you know, as we like to do. We like to comb through, see what's going on in these markets. And I'm excited to share a couple things here today with you guys, as I'm sure you are as well.
100%. Yeah, I mean, yesterday was for futures markets, the market was open for something like 4 hours, and there was no volatility. So it was a great opportunity to just sit around and look at some of the journals, go through some of the statistics, and determine where I'm doing well and where I'm doing poorly. As for today, you know, you volunteered last time, so I'll volunteer first and foremost here. There's a lot of really fun things to talk about, and a lot of them are driven, as always, by the AI conversation. So the first thing that I want to talk about today was SMCI. A lot of acronyms there. If you have been living under a rock, SCMI, they are a absolutely massive company. They've only been around since 2007, so it's not like they're a heritage brand by any extent of the imagination, but they have, as you can see on this annual chart, this is looking at it yearly, they have absolutely skyrocketed since 2022. 2022, we saw this thing go from $40 all the way up to 100. Probably thought that was a great year. The following year, we saw this thing move from $80 into 348. I'm sure people thought that this was one of the greatest things that could ever happen. And then following that, in 2023, we saw an incredible move to the upside, looking at a total return of 345%. No big deal. It's kind of one of those equities that really has been playing a large role in the AI space. They don't produce chips per se. They don't produce the same things that NVIDIA is doing, but they're very, very, very famous for their rack solutions. In other words, in order to create these chips and have these supercomputers operate, they need to exist in some kind of server room, facility, base, and this company produces these servers. This company actually produces these server racks as well. So it's something of incredible interest. Just yesterday, we got some news via X that Dell and Supermicro are going to be providing all of the server racks for XAI supercomputer. If you don't know XAI, that is Elon Musk's try at AI and supercomputer work. So this is a really, really, really exciting piece of news for Supermicro. Dell is going to be providing a lot of the technical assistance in terms of what things actually look like with the chips and the configuration, but Supermicro is able to come in with their really unique liquid cooling systems, and that will allow for things to run much more efficiently, as these servers can run incredibly hot. My grandfather actually worked in server rooms when it took a whole living room worth of servers in order to run 4 megabytes, not gigabytes, but megabytes of RAM. And he suffered several burns throughout his career just because of how hot those rooms could be. At the time, the rooms were 115 degrees and they were just the size of living rooms. Now we're talking about parking lot size buildings with servers throughout. So obviously, keeping those servers incredibly cool and making sure that everything is able to operate saves everyone a lot of energy, it saves everyone a lot of electricity, and it saves everyone a lot of damage to the actual chips, which are incredibly valuable. So that's one of the big catalysts, one of the big reasons why we're seeing things move forward. This is just a quick diagram from SMCI's, lots of acronyms, website, actually breaking down what their different cooling options are. Most of what we see is a direct-to-chip option where they allow for cooled air to flow out of a supermicro cooling tower and the hot air to flow in. It comes, obviously, hot air rises to the top, cool air flows to the bottom, and they pump that cool air out and back into the server rack in order to keep all of the CPU/GPU units as cool as possible. They also have a couple more options that are a little bit more complicated, including fans, along with the pumps, all that fun stuff. But the core of it is they're able to save a lot of electricity. They're able to make things considerably more efficient. They actually received some awards out of San Jose. The mayor of San Jose has congratulated them on repeated numbers because they are incredibly excited about how sustainable these facilities are becoming due to the efforts of SMCI. In regards to their earnings, how much money they're actually producing, I'm always excited when I can see positivity throughout. We've seen some small losses in the areas in regards to their income tax benefit, but outside of that, we're looking at nothing but earnings that are positive over the past few quarters, which is incredibly exciting. We're seeing numbers like $402 million in net income for this past quarter that they posted, and that is an incredible amount of growth. We're looking at only 85 million for the same quarter this time last year. So there's an incredible amount of growth that they've been able to maintain. And when people talk about, Aaron, is this thing a bubble? Are we concerned about AI being a bubble? This is one of the reasons why it's difficult to argue that AI is a bubble, because usually when there's a bubble, there's a high amount of debt relative to the amount of income or the amount of cash on hand for a company. When a company is making 402 million, when a company has net sales, that's $3.8 billion, and they're able to produce hundreds and hundreds of millions of dollars in cash, it's very difficult to argue that these areas are bubbles, even when they're not performing well. As you can see, net cash used in operating activities, massive, $1.8 billion. At the end of the day, they're still able to come out. This is just the quarter numbers, mind you, in the quarter with $2 billion with cash and cash equivalents. When you have $2 billion liquid, it's very hard for you to get into a lot of trouble. It's 100% possible. It happens every day, but it's very hard. When you have $2 billion, you can throw money at a problem. And here in the States, I don't know if you guys are aware, when you throw monies at problems, problems get solved. Crazy concept. Moving on from there, one thing that I'm really excited about, another catalyst for why SMCI saw a really high jump yesterday. Yes, it got the news from XAI. Yes, NVIDIA is pushing really aggressively, and SMCI is correlated to NVIDIA. It's not quite a 1-to-1 correlation, but it's like a 0.8 correlation, very, very close. But SMCI also made some news that they are going to be adding 3 new production facilities to produce more of these super fast liquid cooling server towers. So the product that they're producing is incredibly useful. It's being used across the country. They're not the best at making super efficient chip server racks. I'm not going to lie to you and say that they are, but this innovative technology is desired by large companies across the world. We're talking the University of Tokyo in Japan, who have the University of Tokyo, which by the way has 3 of the top 100 most efficient server facilities in the world. We're talking about NVIDIA and a variety of their different facilities extending from here in the US to some of their subsidiaries, and as far as Denmark are after these systems. So there's an incredible amount of value there, and it's really important to remember. Extending away from some of the financials, I like to talk about the ratings. For the most part, the ratings show a price target around $1,023. That's not quite, but somewhere close to about a 10% move from where we are right now. Most analysts believe that this thing is a buy or a hold, and most people aren't concerned about this thing underperforming or selling. So we have a lot of positive catalysts when we're talking about the upgrades and downgrades. When we start to get into the nitty-gritty, in terms of it being a long-term opportunity, it's tough for me to say that it is. When we're looking at the valuation of the company, when we're looking at the overall performance, the forecasting, I get nervous when we see things that are incredibly volatile. The amount of volatility that we've seen on an SMCI, we see an average weekly movement of 12.5%. In information technologies in particular, we usually only see 5.5% moves on a weekly basis, which is a ton, mind you, but that kind of volatility isn't very exciting for my long-term portfolio. I like to hold things that create incredible amounts of value, pay a dividend, and aren't going to change my long-term P&L super aggressively week to week, month to month. So when I talk about this equity, I'm much more interested in its possibility as a swing buy or a day trade. We're looking at the overall value of things. Again, I love the fact that they're able to produce gross profits north of $1 billion, pretty healthy margins at 16%, pretty normal. Overall, when you do it, this is a discounted cash flow model. I'm not going to go into what all that means, but this is just a model to determine how valuable a company's stock price should be. We're looking very, very, very comfortable at that. We're currently at 920. This model says this would be around 991, so that makes me a little comfortable. When we're looking at its performance in terms of its price to earnings ratio, it is pretty doggone expensive. We're looking at a price to earnings ratio at 51.4 versus say like Adele is 29.5, Net AP is 26.9. It's a Hewlett Packard is 15.7. So its PE is incredibly expensive, which is to be expected. It's AI, it's connected to NVIDIA, it's everything that you want to see. I don't have time to go through all of these components, but the long and short of it is the long-term possibilities for this equity are definitely there, but it's just really expensive for me, so I can't buy it for my own portfolio today. You decide what you want to do. As for where we are on the daily chart, I'm really liking where we are. I think there's a strong possibility that we could see some strong movements to the upside. We had a little bit of a downturn here from March into where we've been just in June here. We have seen this area of support hold quite nicely. We've been here not once, not twice, not 3 times, but 4 times over the past few months, and we have held it continually. So there seems to be a possibility for a change in trend. If we can continually print green bars, I think this will be a great opportunity for us to bust above this trend line here, as we already have, close aggressively and seek to get back towards highs. Like I said before, this is an equity that's very, very, very nicely connected to NVIDIA. NVIDIA has been on highs since what year is it? 2024. NVIDIA, it feels like it's been on highs since 1986. That's not true, but that's what it feels like. It feels like it's just never going to come down from highs. So as long as we can continually see NVIDIA performing well, and we start to see more market breadth come in from the NASDAQ and other areas in regards to tech, as we see interest rates potentially fall, there will be a lot of opportunity for this trade to be not just a swing trade that lasts a couple days, a couple weeks, but this could very easily be something that you can swing for a month or two. We have 47 days until their next earnings report. So there's a lot of room for technicals to flow quite well. We've gotten a ton of positive news catalysts. As long as nothing crazy goes on in the AI space, as long as Nvidia doesn't start losing money all of a sudden, it stands to reason that we'll continually see SMCI perform incredibly well, produce a lot of money, and continually innovate, specifically in their cooling systems regarding chips that create these supercomputers that power ChatGPT, Gonk for Twitter, and a variety of other systems. That's SMCI.
Love it. Love to see it. And SNCI is a prime split candidate, right? It's a prime split candidate. You see what it did for Nvidia. It continues to hold highs. Usually when you get a stock split, right, you get the run up into the split, and then you fall off a little bit on price. And Nvidia is basically on a 10-to-1 split, trading the equivalent of what it would have been $1,300 and higher on post split. Now sitting at like 132, 133. We talked on Tuesday evening here in the States, and I was like, yeah, my only trade was on Nvidia that day, and I traded it to the long side. And I think it got up as high as like 134. So, really bullish run up in terms of AI. Again, we're talking about these market narratives, right? What have we been seeing in the markets? SMCI is a sneaky little beneficiary of what Nvidia was doing. Everybody was looking at Nvidia and like, I can't believe the price has done this. And I saw SMCI go from like $300 to $900 in what seemed like a couple of weeks, and I'm like, what the heck happened?
Incredible.
But when you position the incredible positioning, right? They had something that was proof of concept that worked, and they could produce it at scale. And the big boys were like, yes, we want to use your stuff, and we're gonna work to play nice with your stuff. And off we go. It just the lottery of the chosen, if you will. And SMCI was definitely been chosen. So I think my next pick will be the second thing I'll talk about today will be kind of in that AI realm, that AI story for sure. But let's pivot away from that, take a little bit of a break from that, and we'll talk about the other narrative in the market, which has been crypto. Crypto has been one of these things in the market that we've been talking about it. Bitcoin, caught a bid, and rallied up from down, below $20,000, and then traded up towards that $70,000 mark. We've peeled away from that a little bit. We're still trading higher than what we did, and there are a lot of participants in these crypto markets in terms of companies that go out there and are either a brokerage exchange for it or Bitcoin miners themselves. And I'm talking about CleanSpark. CleanSpark is a company that is an energy services company that they provide advanced energy software and control technology, and additionally they are a Bitcoin miner, right? And they've actively been expanding their Bitcoin mining capability here very recently, which we'll talk about that in detail. I always like to go through the charts first and say, okay, well, what do we look like? Let's take a look at the daily first and say, okay, well, we are holding this $15 level very nicely. We've kind of pushed up off that $15 level here the past week again, with a little bit more momentum than the consolidation that we've seen, pushing up towards this $20 level. You do see a gap down here that we haven't, we've tested through there once, this $21. If we test through there again on strength, I have a feeling that we could try to get up towards this $24, $25 level. That's where I see the technicals. I see, it's not the most bullish chart on the daily, but it is fairly bullish. You got a rising 200, you got a overall a rising 50, although we've kind of flattened out again. But you see this price action here very recently where we've really picked up, and there's a catalyst for it. Hence the reason why I'm talking about CleanSpark in the first place. And then I'll pull this up and then pull this up, and then there we go. Okay, so Again, what do I like about CleanSpark? It is continuing to grow. It recently acquired 5 turnkey Bitcoin mining facilities in Georgia and for $25.8 million. It's this acquisition is expected to significantly boost its mining capability. Talking about something like they're going to have like let me get this pulled up here. Something like 400 megawatts of mining capability total. They have facilities in Wyoming and New York as well, and so that's one of the things that I do like about CleanSpark is that even right now they've got money to continue to grow. And so I like the fact that they're going out there and they're getting after it. One of the things that I don't necessarily like about it is it is reliant on crypto markets. And what I mean by that, right? We're talking about a crypto stock, but like it may not be its own fault, right? If the price falls on it, and that scares me on a stock that I'm looking to throw in my portfolio. So when I look at CleanSpark, it is reliant heavily on the price of Bitcoin. Now we saw a little bit of, I wouldn't call it divergence, right? But it held up because it had its own individual catalyst in terms of buying these new facilities, and the market saw that as a positive, even though Bitcoin's been consolidative, kind of turning back a little bit. And crypto markets as a whole have been really consolidative, but that doesn't generally happen. What happens with these crypto stocks is you get a bull run on crypto, you get a bull run in these stocks of miners and everybody else that kind of, that economy, that crypto economy, if you will, they all kind of move together. And then the other thing too is since we've now seen these Bitcoin ETFs come into fruition, that Bitcoin has moved generally with the market sentiment. So it really doesn't move independent of the market. It moves kind of with the market in a sense. So looking at a CleanSpark, it's completely reliant, in my opinion, on crypto continuing to rise in price. Now, with the halving that we just had and the continued halving that we're going to get, and mining our last Bitcoin in a few years, at that point, like, sure, the Bitcoin that they do have, it'll hold value, but then they're going to have to do something with it, right? They're going to have to sell some of their Bitcoin to have value. So at some point, they would have mined their last Bitcoin anyway. So unless they're into mining other currencies, other cryptocurrencies, that could be an issue as well. And again, but the other bullet that I have here, it's very volatile and it can make your portfolio sick. And that's my biggest takeaway on this is in terms of like a portfolio ad versus a trade. I don't necessarily feel this as a portfolio ad. We talk about and Aaron, a man after my own heart, you talked about what do you like in your portfolio specifically? Stocks that hold value or grow slightly, very controlled levels of growth that provide a dividend that I could turn around and reinvest right back into the stock. Yeah, that's kind of what you want your portfolio to do. If you're a bit more I would call it a conservative investor, that's kind of what you like to see. You don't want your portfolio swinging 10-15% in a week. Unless it's to the upside and it holds, sure, I'll take the free gains. Who wouldn't, right? But slow, sustainable growth. I've been in these markets long enough where if you get a strong uptick in price, I like to sell in the strength. I'm like, all right, let me cut this here, and if I can't get back into it, then that's fine. But in terms of like a CleanSpark, that's not the stock here that will provide that. Honestly, revenues, even in Q2 2024, they reported revenue of $111.8 million. That's surpassing the estimates of $109.5 million. Majority analyst ratings on this recommend to buy, but the consensus price target that I was able to find on it was $19.97. So we're sitting right at that price target now. And so now I'm sitting here saying, okay, well, if we're kind of targeting that, and then we kind of see that in the chart there where we've kind of oscillated between that $15 and $19 level, then it's although we're moving up on momentum, it is a bit riskier of a play to say, hey, we're going to break through this level and go towards that $22, that $25 level. So given its high beta, it's significant. It's prone to significant volatility because of the crypto currency market fluctuations, and then broader economic conditions. You know, if I'm tight on money, if I'm tight on investing cash, if you will, I'm not really necessarily looking at going into CleanSpark. I wouldn't short it either. CleanSpark has a 15.33% short interest. You know, and there is some skepticism out there as I struggle to get that word out in terms of how long is a business like CleanSpark viable. I would say that, yeah, there's a shelf life on it, in my opinion, because again, I talk about mining that last Bitcoin. We're closer to the end of the beginning in terms of that Bitcoin mining cycle. So what do they do with their technology? How do they pivot away from that? I think it's going to be on their energy business, but then if their cryptocurrency mining business is kind of just done, then that's a good core of your business that's not necessarily good. Now, if I'm somebody from CleanSpark, maybe I'm getting a hold of the folks over at SMCI and saying, how can we make your power management a little bit better? And you hitch your wagon onto that horse and see where it could take you. I think if we get something like that in CleanSpark, it really will change the direction, or really accelerate the trajectory and kind of make them like a more sustainable business. Then maybe they could become, some sort of like a portfolio business versus a swing trading business. But in terms of where it's at right now, it's in a good spot. People like it, but not necessarily a place where we could see again, decades from now, a CleanSpark out there continuing to mine these cryptos. Only a fair few of these cryptocurrencies are gonna be around for the long haul. I think that we're gonna end up with a basket of cryptocurrencies, especially if these central banks go through and they start talking about creating their own digital currencies. That's going to eat away a little bit at the dog with hats that we used to talk about, cryptocurrencies. It's like the kid that's growing up, right? Crypto was that counterculture thing in terms of markets, and you're like, you know what, I need to be able to hold my own wealth and hide it from whatever central bank and everything else. And now they fought for legitimacy, they have legitimacy, and now we're back to basically it's a digital currency, but it's not that counterculture currency. Do weird things happen? Can do bad things happen? Absolutely. A lot of criminal organizations, unfortunately for cryptocurrency, they love that crypto when they're talking about those ransom payments. And the next thing I'm going to talk about, they just went through that here recently, where there was some data that was breached, and they turn around and asked for the payouts in like a cryptocurrency, and it was like one I never heard of. So so at the end of the day, like you look at this, I'm not necessarily buying it. A couple more data points before I close out on CleanSpark here. They did, year to date, 76.6% stock growth year to date. So it has seen a substantial amount of growth. And again, $283.63 million in revenue over the past 12 months. And again, I talked about that 111 million in Q2 2024. So you're seeing an accelerate, like you're seeing a good chunk of this revenue coming here more recently versus post tense, and a gross profit of $27.27 million. But the PE, when we talk about this with portfolios, the PE currently stands at 148 on the PE. So it's trading way above its PE. In terms, so people are still expecting a lot of growth. I think there is growth in this. I'm looking at this for a swing trade, but I'm not necessarily looking at this as it's not a great portfolio holding. It doesn't pay a dividend. It doesn't do anything like that. And you're really relying on the stock price. And again, while it's generally bullish on the stock price, it's not necessarily doing things that we just saw a really sexy chart with SMCI. Clean Spark is a bit relatively, I wouldn't say relatively uneventful. It's just consolidatively volatile, which is like the worst kind of stock for me. So yeah, not buying it.
Amen. Consolidation in ranges with volatility is one of the most annoying things that you can get yourself involved in as a trader. I struggle to buy these kinds of opportunities as well, and especially when they're connected to some kind of shelf life, like you were saying. What happens when Bitcoin has all been mined and it's just a market? Because although it's going to take some time before we get there, it's going to get there at some point. And it's not like a gold or a copper where we talk about getting there, but we find these random pockets of gold that will last us another 100 years, another 200 years. It feels like something like a Bitcoin could be all mined sometime in our lifetimes. That leaves for a different kind of scenario, a different kind of situation. Speaking of a different kind of scenario, different kind of situation, I love talking about financials. And this is a little bit more traditional than, say, a crypto, but still very interesting. I'm talking about Citibank. Citibank is something near and dear to my heart because I'm not a very dramatic person. I don't know if you guys can tell. That's sarcasm. But I love I loved watching soap operas as a kid with my great grandmother. My grandmother, Young and Restless, and all that fun stuff is stuff that I grew up on as a toddler. I stopped watching soap operas when I was 7, but that's when I started getting into the drama of the finance world. Citibank is very, very, very famous for producing incredible CEOs that never worked at Citibank. People like Jamie Dimon, the current CEO and king of JP Morgan, sitting at the top of the world, came from Citibank. And you can see the years that he was present there, the company did incredibly well. I'm not saying he was 100% the reason, but you better believe he was a big part of the puzzle. Now, of course, 2008 showed them a really rough 2007, 2008 showed an incredibly rough year. And since then, we've gotten nowhere near the highs that we spoke about at that time, 2006, 2007. This thing was trading at $550 a share. And now we're trading somewhere closer to 60. But c'est la vie, so is the nature of life. The equity's been around since 1986, so to say it's a heritage brand is an understatement, but there's a lot of very interesting points that you should be aware of. I know I've been looking for more financials to add to my portfolio because throughout all of these issues of inflationary pressures, high interest rates, banks and financials that have money that are large enough have been performing incredibly well. Your Citibanks, your JP Morgans, your Morgan Stanleys, all of these banks have incredible amounts of cash on hand, so they're able to buy up assets from these failing regional banks and bolster their positions and make much larger businesses and much larger opportunities than what has been previously present. I'm not buying Citibank though, and I want to break down entirely why for you guys and what you should be looking for when you're trying to buy into the financials space. Now, there was some really great news. This is the thing that attracts me to equities, and this is the thing that attracts all of us to equities. Positive news just came out yesterday that Citibank's investment banking revenue is tracking 50% above what it was just this past year. Investment banking is a very large piece of the puzzle for Citibank, and so stuff like this matters a lot. They're able to make a lot more deals, and when you're making a lot more deals, you're making a lot more money. When you're looking at the global market share of leading investment banks as of June of this year, JP Morgan, as I said before, big boys, they're sitting at the top, and Goldman Sachs, Bank of America, Morgan Stanley, then Citibank. Citibank has to fight hard to get some of this market share because with each percentage point, with each tenth of a percentage point on this particular chart, that is $100 million in revenue that they could be bringing in because of how much investment banking plays a role in revenue for these incredibly large banks. It's one of the reasons why JP Morgan back in the 90s focused considerably on making sure they were producing not just great bankers, but great investment bankers. JP Morgan is very famous. Goldman Sachs is very famous for stealing people that have nothing to do with the investment banking world, but just have a mind for business, a mind for deal making, and produce them into the most incredible investment bankers. JP Morgan is very famous for stealing from law schools, stealing from medical schools in order to produce very, very, very smart, very, very savvy bankers that are able to make deals. And Citibank has begun to do the same. However, when you're looking at how much money they've actually been able to produce, they're lagging considerably behind their competitors. This is just their investment banking revenue over the past few quarters. It's gone up and down, it's gone down and up. But looking at last year around the same time, they produced right around what they did in the first quarter of last year, $667 million. I know that I say that that's lagging. That's still a ton of money. It was 50% gains over last year. They'll be sitting probably a little bit above what they did in the first quarter of this year. So it's sitting closer to $1 billion in total investment banking revenues. And that's revenues that they need drastically because their net income in the last quarter of 2023 was negative. This is a massive bank. This is, again, a heritage brand, and yet they have produced negative quarters, negative earnings. That's a horrible sign. They need to do what they can to make up for that. When we're looking at the other pieces of the puzzle for this guy, let's see here. It's really nerve-wracking to me, that the equity produced $1.8 billion in losses on revenues of $17.4 billion. All of this stuff being negative for a large bank is incredibly concerning. During 2023, they were able to produce $9.2 billion. I'm expecting to see on a quarterly basis, a quarter of that hit their accounts, right? I'm expecting to see $1.8 billion in positivity. The fact that we're seeing $1.8 billion in losses is a little nerve-wracking. Why did they see that kind of loss? Well, they're saying that this is primarily driven by higher expenses, higher cost of credit, and lower revenues. All super negative things that we don't want to see when we're analyzing a financial opportunity. Higher expenses. What kind of expenses are you seeing that are higher? Their tax requirements. A lot of their deferred tax payments came up last year and hit them straight in the nose. Everybody has a plan until they get punched in the face, as a great Mike Tyson said. Higher costs of credit. We talk about this all the time on the channel. Interest rates are not your friend when you are a bank, and they've had to refinance a considerable amount of their loans, as not just their loans for their clients, but their own loans in regards to their debts. This has been hitting them in the face very hard as well, and lower revenues. They just haven't been able to produce as much. They've been losing a lot of business to the other big banks that we've been talking about here. Market share has been lost to Morgan Stanley, Goldman Sachs, JP Morgan, and Chase. I don't know anyone personally in my life that has a Citibank card and is very proud of or excited about it. The JP Morgan Chase has done a magnificent job with their Sapphire card. Amex has done a magnificent job with their Gold card. So on both the investment side and the personal banking side, we're seeing a considerable amount of weakness in Citibank because that branding, that excitement, it's simply not there. My wife wanted to change our joint bank account from Discover over to Chase because of how convenient it was, the customer service, the quality of the points that you get. There's so many things on a personal basis that I can attest to that is a story for not just myself, but many other users, many other people that are trying to get the best bang for their buck, like Dave.
I'm talking. Yeah, I'm like literally. I hate to sound like a Chase commercial here, but that's kind of one of those things. Absolutely right. It's easy to use. And what you get with it makes sense, and it's drawn out. And so even if Citi was offering the same thing, it's really hard to discover that they are, and the ease of use of it, because they don't show it as effectively. So a second for what Chase does versus a Citibank.
Exactly. And it hurts when you're not able to produce magnificent branding for your products and show people how magnificent your products are, which is it's a sad thing, but the city does have a lot of really great benefits. In my research for this presentation, I got excited about some of the card benefits that they have. But will I be switching? You bet your bottom dollar I will not. I'm sticking with JP, and it's going to be hard to get me away from that because the marketing, the branding, the perceived value that they've put in my head. It's all there, and it's there in the numbers as well. Now, actually getting into the nitty gritty of their earnings, I know I spoke about them having a negative Q4. This is done chronologically, so Q1 2023, Q2 2023, so on and so forth. We saw some beautiful gains. Net income $4.6 billion in Q1 of 2023. They are $1.3 billion down from this past year. 1.3 billion with a B. And they still have to make up for this incredible loss that they got in Q4, that $1.8 billion that I was talking about a little earlier. This kind of stuff makes me incredibly nervous when I'm thinking about it from a long-term opportunity. And it's one of the reasons why I'm not buying it. It's one of the reasons why I might be looking at trying to enter into a short position on this kind of equity. In terms of their total operation expenses, they did talk about how in Q4 they did see a little bit more in total operating expenses being a little bit more expensive, and they're 100% right. These are all calculated millions of dollars. You have to remember, so 15,996 is $15 billion in total expenses, and that is roughly $1.8 billion more than what their expenses were for the past quarter. But even if you level out this particular number in terms of their operating expenses and say it's the same as 13,511 here, this would mean that they are more or less break even on a quarter. Again, that's not a very convincing position. That's not very exciting as an investor. That's not something that you want to make sure you're getting involved in. Now, when we talk about the ratings on it, this is another issue that I have with the equity. Another reason why I might be interested in potentially shorting it if we continually see this kind of performance. All of the ratings on average say that this thing should be around $66. We're currently trading at 60. The average is actually $69. We're currently trading at 60. So there's some room to the upside, but no one has come out and said this thing is a for sure buy. This is a strong buy. This is exciting. None of that kind of news has hit the market. At most people and most places are saying that they're going to maintain. And let's be fair here, these are companies that have ties with Citibank or Citibank executives. So I would be surprised if a Jeffries, whose CEO was a former Citibank employee, a former Citibank executive, I would be surprised if they came out and bashed companies that they're kind of friends with. It's the nature of the beast. When you're looking at the big overview, you guys obviously know I love looking at all these really nitty gritty details. It's really hard to say that this thing is going to go to the upside. Most of the charts, most of the items I like to see that show incredible amounts of strength, it doesn't show incredible amounts of positivity for this equity. Getting down to the valuation, price to earnings versus their competitors is again a little rough. It's expensive. Goldman Sachs is much more aggressive, but 17.6 price to earnings ratio. It's so expensive compared to some of the other opportunities that are making so much more money. JP Morgan, Wells Fargo, and Bank of America have all seen gains in their year over year revenues, not necessarily gains in their profitability, but they're making more money. Citigroup hasn't seen that, and yet their price earnings ratio is considerably higher. That's not really a great sign. Historically, this thing is on highs in regards to its PE. Not really exciting. When we're looking at the overall future growth of an equity like this, the forecasts are not bad. We do believe, analysts do believe that this thing is going to be moving quite aggressively in terms of its earnings growth. Annual growth is pretty close to the industry, just barely underperforming the market, but it is expected to grow a little bit slower than expected. All of these things play a role when I'm thinking about trying to make sure I'm putting myself in a position to make lots of money long term in my long term portfolio. And when I'm looking for a swing opportunity, it's tough to buy this thing on a swing when I'm seeing this kind of criteria missed and missed again and again and again. When you look at its past earning criteria, its gross profit margins are considerably lower than what it was last year. Last year, we're making 20%. This year, we're making 10. All of these things are just negative, negative, negative. I could go on and on and on about it, but here's where I'm at with the equity. Here's a daily. Now, all year, we've seen this beautiful push up with very rarely seeing very strong pullbacks to the downside. I think that this is an opportunity for us to think about what could happen if this thing continually breaks down. We're seeing a higher low post here. So in order for me to really get bearish, I would have to see this low get taken out at the 56 area. But if we can continually find ourselves printing closes underneath this trend line, if we can continually find ourselves struggling to print with aggression towards these highs, there's an opportunity for this thing to pull back quite aggressively, because when you look at this chart, it is skyrocketing to the upside. And with financials, generally speaking, what comes up must come down. In order for this thing to be a bit more stable, we should see some kind of pullback to the downside. And I'm thinking areas like the 54s, like the 53s would be exciting. In order for me to really get in on the position, I need to see strong rejections here, strong breaks beneath the lows, and then we can talk about potentially entering into something to the short side. Either way, Citibank, not buying it.
Not buying it. And interesting. So again, we some of the kind of recurring themes that I kind of see in my mind with a lot of the things that we talk about, we're like, it's like the branding, right? We talk about the branding, and then you're just like, perception is reality, right? And then these markets, if you're able to perform as a financial institution in this higher interest rate environment, what do I mean by that? They have to refinance their own debt. Some of the stuff does tend to mature. And then, if your investment banking side is strong, I think that is a big deal right now compared to just the only like the commercial side, or just the day-to-day banking, right? I could speak to Chase in particular, right? You got Chase banking, and then you have JP Morgan investment services, right? So you got two companies kind of operating in that same umbrella. There's a lot of strength in a company like JP Morgan Chase versus a Citibank versus the Wells Fargos of the world, and some of these other banks out there. And so you look at that and you're like, yeah, Citibank doesn't make me feel good. I don't feel as proud to walk into one of those branches that I do as to walk into a Chase. And guess what? Chase doesn't even pay the highest on their accounts. They don't pay the highest on their savings accounts, and they don't pay the highest on their I've been looking and doing a bunch of 3-month CDs on money that I don't want to lock up for a long time, but they're offering really good rates, and I've been able to roll them every 3 months. I've gotten better rates from places like Vanguard, for example, than I did from JP Morgan or Chase. But at the same time, credit cards, really good. Checking account, easy to manage. So I'm like, you offer me convenience and you make it look good. It's really hard for me to say, I don't like it. And with Citibank, I've used them before for work. Our work credit cards back when I had a 9-to-5 were through there, and those websites were clunky, and I wanted to put my fist through the computer every time I had to log in to do something. And that's a problem. So, all right. So we've talked AI, we've talked crypto, we've talked finance. Let's just build a nice sandwich and build a nice AI sandwich. The next stock I'm going to talk about is one of those stocks that has been a player in computing for a long time, but it's always been, before this whole AI thing really took off, it was always this versus that, and it was the little brother to the NVIDIA when it came to the GPU space, and it was always little brother to Intel when it came to the CPU space. And so this company that does both and does make AI chips. I'm talking about AMD. And I like AMD in terms of a company, but they've really struggled here lately in terms of just the perception, right? And Nvidia has enjoyed this kind of this run up, if you will, in terms of its pricing, and we've had extensive conversations on it, and AMD not so much. If we could bring up the chart, we'll get into what I'm looking at here. So again, let's break down the chart. We look on the daily. This price action here from the October lows into the end of the year, into the spring, really bullish. And you got this. Look at this bearish candle here with the huge wick up top, fell to 230 level and just blew, and I think it frankly scared the crap out of everybody. And we haven't even sniffed that yet. We lost the 50, consolidated around there. This is the 50 period moving average on the daily, lost that after a brief fight. And then once we lost it and we were like, hey, we're done here, we were done. Consolidated there, another leg lower. Had a defense of the 200 period moving average. I did swing trade this the first time we got really close down there. Once I saw a bullish candle above the 200, I kind of traded it up, got into a position, and then sold into these lows here, into the 160 level is basically what I sold into on a swing trade basis. So in terms of swing trade, that was a lot of fun. I saw a rising 200. I'm like, you know what, I'll take a chance on that, and I was going to stop out below 133. So good trade there, had fun with it. But then we chopped around here. Looks like I picked the right time to sell, kind of selling off from there. But I'm like, so on the daily chart, right? We just formed a lower high. We have a lower high here, kind of have a lower high here. And now we're just kind of like drifting down and looking quite possibly to tag this 200 period moving average again. So on the daily chart, I don't necessarily like the way this looks. And so here's what I did on this specifically, because AMD's not this, I talked about CleanSpark earlier. I don't look at AMD in the same way that I look at CleanSpark. I look at AMD a little bit differently because we know they exist, we know they make products, and we use them. Not as much as we do the NVIDIAs and the Intels of the world. We had this conversation. We just feel how we feel about it. But at the same time, AMD is widely used. So I said, okay, well, let's look at the weekly chart. Weekly chart. Now you're looking at, okay, we bounced off that support. So we attempted to bounce off of this 155-ish neighborhood, kind of where we're at right now. We consolidated there on the weekly chart, attempted to bounce out there, resisted this 170 level, and then now we're testing back down here. Don't pay attention to the moving averages because those, I don't use the 50 to 200 on the weekly. But on the weekly, you do see rising moving averages. Still a fairly bullish chart, but we just formed this lower high, which can scare me. So then I said, okay, well, let me make this chart try to look at, this still looks fairly good, but I don't like that lower high. Let's look at the monthly. I did the same thing on the monthly. I'm like, all right, what do we look like on the monthly? Okay, we've got this high here, this high here, this swing low here. We've got kind of a little consolidative high here. We pulled back, just pushed through there, made an all-time high, fell that 220 level, probably got a little higher, closer to 230. Now we're kind of downturning again. And I said, okay, are we actually going to support this level? We'll see. And so why was I doing this? Because I kind of want to buy this is my problem. And I'm just trying to figure out where to buy it, because when I go back to the daily, I do like the idea of this rising 200 period moving average on the daily chart. So, and we are like, are on what I consider to be quite possibly, in terms of chip makers, the second largest chip maker in the space. Are we really gonna fell this 200 and start having a downtrending 200 period moving average on the daily? Like, I find it hard to believe, but possibly, right? So now I'm looking at technicals married with my fundamental belief that AMD shouldn't necessarily be doing this. But why in the world are we picking on a company like AMD. So a couple things come to mind, and we'll bring this over and there we go. All right. So, again, as I just described on the chart, the recent downturn in the price might provide an opportunity to get into the stock. So I kind of showed you where on the chart, there could be, but, we're down 25%, not on the calendar year, but year over year, down that 25%.
Wow.
So it's to me, I'm like, okay, again, why is AMD doing this? I don't know, because the analyst ratings, most of them are sitting there saying like a buy. So I'm looking for the number of ratings. So yeah, generally, so Wall Street generally maintains a positive outlook on AMD. 48 analysts that I found that covered this, 37 had it rated as a buy or a strong buy. So 37 out of 48 say you're safe to buy this thing, even at where it stands right now. Consensus price targets sitting at $191. So looking at this, it's still saying that there's more to get out of this. And we've hit that price before. The bullish sentiment reflects confidence in AMD's growth trajectory, and especially in the AI and data center markets. Again, what do we keep talking about? We keep talking about the AI. That's the surface level stuff. It's these data centers that we keep talking about. If you can't get enough NVIDIA chips, you're going to go buy AMD chips. That's just the way that's going to be. You're probably going to get some equivalent performance, but you're going to performance per dollar is actually going to be better with an AMD chip. I like the NVIDIA more. I'm willing to pay more for the NVIDIA, but your bang for your buck is actually better with AMD. That's the branding issue that has existed. And if anybody's been a PC building nerd for however many years, you do the same thing. I'm guilty of it. I won't buy an AMD GPU and put it in my computer because it's not NVIDIA. That's it. That's it. It has nothing to do with I could get better performance. And I don't know how many YouTube channels I watched, and they do the whole benchmark thing. They don't look as cool. They don't sound as cool. They don't make me as proud. So I'm not putting it in my computer. So that's, but again, AMD has made significant strides in the AI market. They have their MI300X and MI300 Alpha, their AI chips. Those are the competitors to the NVIDIA chips. These products are designed to compete directly with those NVIDIA offerings. Initially, AMD projected about $2 billion in AI chip sales. It's recently been revised to $3.5 billion. So they've actually almost doubled their initial assessment on what they're going to sell. They do have strategic partnerships with some of the leading foundries, TSMC being one of them, to help, kind of manufacture these things. And it does. So I look at this and I'm sitting there thinking like, I like this company. I won't, but why is it doing what it's doing? So one of the things that happened, I almost forgot. So AMD a couple years ago paid $35 billion to acquire a company called Xilinx. It's Xilink. And it's one of these things. One of the technologies that Xilinx had was this thing called field programmable gate array technology. What does that mean? I don't know, because I have no idea what it means. But what it is saying is it was supposed to kind of help it with the 5G side of things. So some of the mobile thing. Stuff that AMD wasn't as good at. So when I look at this, I'm saying, okay, well, again, we go back to, they're spending this to kind of get better at things that they're not necessarily as good at. And there's an analyst that shared some of the saying that really we haven't seen what this necessarily. And I want to find this guy's name. I got his last name here. His last name's Perk, but basically, he thinks that the positive impacts aren't yet fully realized with this acquisition, and that according to management, this acquisition could result in over $10 billion in cross-selling opportunities. And so I think that in terms of what he thinks, and a lot of analysts, again, that this $193 price target on AMD as a whole is one of those things that I'm looking at and saying, okay, that really makes sense. But then Morgan Stanley, we just mentioned their name earlier, they just downgraded AMD, warning that expectations of financial gains from his artificial intelligence products may be too high. So they went from overweight to equal weight while maintaining $176 price target. And so now you had a pretty major firm kind of saying, we don't necessarily see it in the same way, and sitting there trading down off of that. And then the last bit of negative news is that AMD, a hacker claims to sell stolen data from AMD, and the hacker is exclusively selling the data for XMR or Monero cryptocurrency with transactions facilitated through a middle. And so this story just came out this week as well. So now we got some negative stories in there, in terms of like what AMD's doing or dealing with. Claim cyber attacks, again, Morgan Stanley downgrade. But I'm looking at it, I'm trying to find a place to buy this thing because I don't look at AMD as one of these fly-by-night companies. The technicals do scare me, that lower high on the daily. If I'm pulling this thing out to a monthly chart, to say, okay, where do we go from here? I'm going to look to defend the 200 period moving average on a swing trade basis and see if we hold it again. If we don't hold it, I know I'm wrong in it around $130, but not necessarily throwing this in the portfolio. It doesn't necessarily inspire confidence if nobody else does, but a lot of people still like AMD. So kind of sort of buying it, wanted at a better price.
Kind of sort of buying it. You heard it here first, guys. We've run out of time. Thank you so much for joining us here at TradeDelicious. It's been a ton of fun showing you guys what we are and what we are not buying. As always, thank you so much. Please, for the rest of the day, rest of the week, rest of the month, rest of the year, please trade well and trade delicious. We will see you next time.